Okay. So good afternoon, everyone. Once again, you are welcome to today's uh, session. Of the training, which is the day two. Of our QuickBooks Online training. My name is Aziz Adeume once again, and I have my colleague also, Olabi Oshinade, who is equally, a co-facilitator. Right, we'll be walking us through, some part of the training, much more later. And yeah, so just a little, recap of, what we do basically as a firm, and equally, to run us through briefly a couple of stuffs that were done, in yesterday's class. Okay, so we are from Droidedge Consulting once again, and one moment. Let me share my screen. Okay. So from Droidedge Consulting, and we are, an IT company that is specialized into, deployment, configuration, and uh, seamless automation of finance, management softwares, softwares like your accounting software systems, your ERP systems, CRM systems, HR and payroll application. And, we do consulting for quite a number of firms, right, across, different states, within the federation. So, and we've actually configured for, companies in several industries, manufacturing, construction, retail, pharmaceuticals, just to mention a few, right? And so we have a couple of part software partners, that we actually, work with, in order to ensure, a much more robust configuration or deployment, as you might want to put it. So we have Sage, we have QuickBooks, SAP, Zoho, and of course we are Microsoft, partners. These are just, a few of couple of software providers that we actually work with. Okay. So, and displayed here is contact information. This is contact phone numbers. Should you have, maybe you need any assistance on any software at all, or you need, a software configuration, right? Your company need a software to manage one or two, organization related activities. You can always count on us. If you have anything whatsoever, you can send us emails at on info@droidedge.com, right? Be rest assured that, we'll be there to work with you and to give you, excellent services. Okay. So yesterday, right, we looked at quite a number of things. So yesterday we looked at accounting and ERP systems, right? We looked at differences between them, accounting systems and ERP systems, and we looked at, similarities. Yes, we were able to, kickstart our configuration of, configuration of our QuickBooks Online application, right? Where we did, our primary setup, and from there we walked into do, to configure our chart of accounts, where we created, new ledger accounts and all, and we looked at the chart of accounts in an holistic, view, right? We looked at the chart of accounts in an holistic view. So these are, some of those things we did yesterday. And yesterday we were able to look at how we create, inventory items within QuickBooks, Online. We created several inventory items, both service and physical, inventory items. We created those yesterday, configured them properly, ensure their revenue and cost of sales ledger is rightly mapped. We proceeded to creating, our vendors within the application. We created, a couple of vendors, and likewise we created, customers, and we saw how easy, that could be, right, using QuickBooks Online. So yet again, we navigated to, doing suppliers related transactions where we looked at, how purchase process looks like, in a real business environment. And we were able to, software wise, and we were able to kickstart that from our purchase order, right? So we raised the purchase order and we converted, some of the purchase orders to, suppliers invoices, which, same way, called bill, right, within QuickBooks Online, right? So that is where we stopped yesterday. So, which is where we'll be taking it from today. Remember, we'll be making reference to, our class exercise. We'll be making reference to our class exercise, where we have a couple of activities being outlined, right? So, we'll just be starting today's class. Before I do that, just please spare me just a minute. I'll be right with us. So please confirm if you can hear me clearly, if I'm audible enough. So yeah, so I'll be back within a few seconds. Yes, we are good to go. Okay, so now let's get right into it. Quickly, because of time, we have, quite a number of activities, lined up for today. Okay, so my screen should be visible now. Okay, so quickly, so yes, we stopped at, suppliers invoices yesterday, which is called bills. And the next line of action basically is, when a supplier's invoice is being raised, right? Uh, Two things would happen next. Two things is likely to happen next. Firstly, it's either you want to make payment to the vendor, at your specific time, right? Secondly, there could be possibilities of returns to vendors, right? You could have some items being supplied to you, and at a later date, right, you realize that okay, some of these items are bad, right, and they need to be returned. Or in a couple of other systems, you could process your suppliers' invoices, and errors could emanate. So the question is, using a software, how best would you go about correcting that? Also in line with QuickBooks Online, how best will you uh go about that? So which we take that would actually take us to what we call supplier credit, right? Suppliers credit within QuickBooks Online, you know can be tagged as what you call return to supplier, right? Or you could call it a supplier's a vendor's credit note, right? And this is a document that would only be raised in two instances across, and that is how it is across, other applications as well, right? So a supplier's credit in this context, or what you call a return to supplier document in other systems like say 200, right? Or what you call suppliers credit notes, right, in a couple of other applications as well, or you call it suppliers return, is a document that is being utilized in two scenarios. So the first scenario is if there is a proper returns to vendors. So a couple of items, you know, are to be returned to the vendors, right? Due to damages or what have you, right? When such happens, you raise a supplier credit, which is equally called supplier returns, right? That is the first instance. The second instance is, let's say you raised, a supplier's invoice and you have a couple of errors, right? Due to wrong dates or due to, you selecting the wrong vendor in the first place, you know, when such arises, right, you can always raise supplier's credit, as a reversal document to the supplier's invoice. So those two instances, you can raise it to reverse, an invoice, a wrongly posted invoice, or you can raise it when you are properly returning an inventory item, right? So those are the two instances when you can raise, supplier's credit. So if I click on supplier's credit here, and mind you, it needs to be noted that QuickBooks Online actually allows you edit transactions, right? It actually allows you edit transactions. But some organizations, would not give you that right. Maybe the super admin in-house might not give you that right to be able to edit. But then let's say you've posted an invoice in error. So rather than running around wanting to, find a way you can edit that, you can always, raise your supplier's credit. You know, like I have mentioned earlier. So to raise a supplier's credit, I'll select the appropriate, supplier, right? And when I do, I come down here. If the very first thing here is, it depends actually, right? If what you are raising, if it's a proper return, let's say you are returning some items, right, to the vendor. So all you need to do, all right, is to come to supplier's credit here, come down here, select, the respective items that you are returning to the vendor. So in our case, we have, Greenwell, we bought HP Lightbook laptop, 6 units at the rate of so. Let's say we are returning one, of those items. So all you need to do is to select, the item in question and specify. Please note the quantity you are specifying here, right? You can see that the quantity of these items you have on hand is 6. So the quantity you are specifying here on this supplier credit document is actually the exact quantity that is being returned. If what you are returning from this item to this vendor is 2, right? You specify the 2 and you specify the cost, that those items were bought for, right? Which is 110,000, right? And when you are done with this, you select your appropriate, class, in this case, operation. And when you do that, you process. But the critical thing, like I said, you need to always consider, number one is the dates. The dates that will be applicable when raising, a supplier's return or a supplier's credit in this case is that the actual date those items were returned, because that is the exact date the system would consider the items to have left your warehouse, right? Or your stock. So if I'm returning an item as at today, right? So my date should actually be the same date, which is today, so that the system can always deduct those items I have returned, from my inventory, right? That is the first thing you need to note. And the second thing you need to note when raising a supplier's credit, for a return, right, to a vendor, is that the quantity that is applicable here should be the exact quantity that is returned and the exact cost, of those set of items that have been returned. And when you do that, all you need to do is to save and close. And successfully you've raised, a supplier's return using supplier's credit, right, within QuickBooks Online. That is scenario one of raising a supplier's credit. Now, what if in a scenario where we want to, raise a reversal, an invoice reversal? And this is the way it works across all systems as well, right? When you want to reverse an invoice that have been posted, could be in error or anything, right? To go about that, The same screen is what you are using. Remember, the same screen is what you are using, but unlike what we did, when treating suppliers returns, right? The only thing here is all what you will be having, right, on this document here should be the exact thing you have on that invoice you are trying to reverse. What I mean by that is this: it should be the same vendor, it should be the same date, the specific date, right? The specific date that supplier's invoice, right, was meant for, was raised. Do you understand? The same date you have on that invoice, and the line items must be the same. The set of inventory items or service items you must have selected, right? The quantity, the rate, everything must actually be the same thing, just like you have it on that invoice, right? So, and when you do that, all you just need to do is to come here to now do save and close, right? So you can see the difference between when treating a supplier's return and when reversing an invoice, a supplier's invoice. So the only difference is that it's just in two things. Number one, the date in question. The date you are reversing when you are treating a reversal should actually be the same date as that invoice date. That is one, right? But unlike what you have in supplier's return, where it has to be the date that those set of items were actually returned. A vendor could bring an item, say last month, and we are returning it this month. So it should be this exact date, the exact date you are returning that item. That's the date you will be using on supplier's return, right? Unlike when you are raising an invoice reversal, right? And if you look at the quantity, different scenarios will determine the specific quantity, you are imputing when raising, a supplier's credit within QuickBooks Online. So this is very much important and very much necessary for you to note, right? And that is how it works across other systems as well. So when you raise a supplier's invoice document in error, and let's say you do not have that luxury, to reverse, like to edit, such document, because some applications would not even allow you edit at all. Some ERP systems, in fact, most ERP systems will not give you room to edit, right, documents. But then the question is, how do you reverse? So you can always reverse by raising, either a supplier's return document, right? In some software, and in some software, it is being called, supplier's credits, like we have on QuickBooks Online. So you raise that, right? And when you post, it automatically forms, a reversal, right, of that invoice. So the only thing is, when you raise a supplier's invoice, the system credits your vendor, debit your inventory, and what have you, right? But when you are raising a supplier's credit, your vendor will be debited, right, and your inventory will be credited, right? And you can see it's just a reversal, right? And your accounts and your financials will be fine. So that is how supplier's credit works within QuickBooks Online. So I've highlighted the two scenarios that would warrant you, right? That would warrant you to raise, a supplier's credit. So having done that, the next thing you want to look at basically is having done that, the next thing you want to look at basically is payment, to vendors. So let's now say that, oh, either we've returned the part we intend to return, or there's no return at all, right? When you raise a supplier's invoice, because you are using an accrual system, right? So when you raise, so the system would already recognize the fact that you are owing that vendor, right? And the question is, how do you make payments to vendors? How do you make payments to vendors? So to make payment to vendors, right? Any vendor you must have raised supplier's invoice for. There are two things. We might be making a payment to a vendor, right? It is quite different from we just recognizing expenses. Do you understand? So you would only do payment to vendors, right? Payment to vendors within the application in a situation where you have raised, a supplier's bill, which is more or less like a supplier's invoice, because the supplier's invoice you've raised has translated to the fact that you are owing that vendor, right? So now, how, when we want to make payment to vendors, what do? We can do that in two forms. Is that we come here to do new, right? And you see pay bills. Pay bills actually translate to payment to vendors, right? Or you go to the suppliers end, you come here, expenses mode, you go to suppliers and locate the supplier you intend to, process transaction for. So let's say Greenwell, right? You can see Greenwell. You can see the amount we are owing, the current balance we are owing Greenwell, right, as a vendor. So let me go a step back. So let me go a step back. Suppliers. So these are all my suppliers. You can see the amount we are owing Greenwell. You can see the amount we are owing, Dice Finance Limited, right? And action here, should you want to make payments, should you want to create an additional bill and whatsoever, you can also do that from here, right? Aside, going to your new. So if I want to make a payment to a vendor, I'll just come here and I'll say pay bills, right? So when I come to pay bills, now I am to select which bank, am I making payment from, right? I need to specify that I need to specify my date. I need to specify, which vendor or which supplier's invoice, am I making payment for, amongst all these outstanding suppliers invoices that I have here, right? So that is how this screen works. So let's now navigate back to our class exercise, because we have, some actual payments that were being made, to vendors within, a specific period. Okay, you can see, I scroll down a bit, you can see suppliers and vendors paid, during the year. You can see their dates that they are being paid and the amount that is being paid to them. So we can see here that on the 12th, right, of January, we made payment to Greenwell via our Zenith Bank, 450,000 naira. So what I will do is to come here, right? I'll select, Zenith Bank, because the right account that the payment is being made from needs to be selected. If I select a wrong account here, I would get a wrong report, right? So I've selected Zenith Bank. Then my payment date here. So yeah, 12th of January. So in this case, we're using 2023. So I can just type that here, 2023. Right? So who do we make payment to? Greenwell Nigeria Limited, and we pay 450,000. So do we have any open invoice? Yes, from Greenwell. Yes, we do. So we'll come here. How much are we paying? 450,000. Right? I will do that, and for that specific date, do I have any other payments via Zenith Bank? No, I don't. Right? So what I want to do here is to save. I want to save this. I've made payments, right? So what I've done is I've made a payment to vendors, to one vendor. So the next thing is I did save because I want to, enter, another transaction. So you can see that my reference number has automatically moved to the next one, which is 2. So the next thing here is on the 8th of January, we paid Dice Finance Limited via the same Zenith Bank, 100,000. So I'll come here, same Zenith Bank. So 0801 2023. So Dice, how much payment? 100,000. But let's say on this same date, there is another payment that was being made from Zenith Bank to another vendor, right? On that same date, so I can as well tweet it on this screen. I can tweet it on this screen as well, right? So, but then that is the only transaction we have for that date. So we move on. I want to save this, select the next payment that was being made. Pan Ocean Nigeria Limited, we made payment to them from GT Bank, we paid 200,000 on 19th. So I'll select here GT Bank, and this is 1901/2023. Yep. So Panocean, how much is it again? We paid 200,000. So save that. Wadoi Nigeria Limited, cash was being paid, 100,000. So that simply means that, oh, sorry, my date is wrong here, 2023. So save. Okay. $19. Okay. So payment here was 200,000. So save. So should be good. Okay. So I guess my network, let me refresh my screen. Okay. So let's confirm that GT Bank, the payment date was 1901/2023. Okay. So Panocean Nigeria Limited was paid, 200,000. Click on save. That has gone successfully. So Wadoi Nigeria Limited was paid 100,000 on 25th. So they were paid, via cash. So cash on hand would be affected. 25/01/2023. Okay. Okay. Wadoi Nigeria Limited. So as you can see here, because we do not have any outstanding invoice, right? Any outstanding bill from Wadoi, right? So what do we do? All we need to do basically is to come here. So that means we have to capture that payment either from the banking screen, right? Or we just come to the vendor itself. We just come to the vendor itself under expenses, suppliers. This is what doing. Then we come here, right? And we can always, write check, right? It's similar. Making payments to them is similar thing, when you do write check. So we select what do we here. They are being paid from cash on hand, right? So now we paid cash 100,000. So we come here, what date? So this is 25/01/2023. Your date is very, very important, right? So what is being paid for? We enter the description of I just want to say payment Wadoi. So how much was paid? 100,000. That's fine. So I want to do save and close. Okay. So the system wants me to just select a ledger. Okay. There is no VAT on this. Save and close. Right. And with that, right, we've actually raised, a payment, to vendor as the case, may be. So yeah, so that is how you get to do that, using QuickBooks Online, right? Remember, we started from purchase order. We went to instances that want us to convert such purchase order to a bill. From a bill, we looked at, suppliers credit instances where suppliers credit would be raised, right? So having done that, then we did payment to vendors, right? So vendors that have outstanding bills, right? I mean, outstanding invoices that are to be settled, And you could have advance payments to vendors, which is similar to what we've just done now. So yeah, that's actually sums some of those critical things you get to do with respect to vendor, right? But note something. I mentioned earlier that payment to vendors, right? Transactions that will be treated as payment to vendors, you know, is quite different from when you are saying, oh, you are incurring an expense, right? So if you want to, you could post something naturally as expense, right? And not necessarily treat it as payment to vendors, right? There are differences. So if you have anyone, created as a vendor, as a supplier within, your system, so it simply means you want to track, suppliers' invoices and payment that are being made to them. That's what it means. And when that expense must have been incurred, right? You must have processed like a supplier's bill, right? And when payment is now being made to the vendor, you do payment to vendors, right? But expenses, yes, you could be paying, what you call vendors, outside the system actually, right? You could make payments and all, but they could just be treated as direct expense, right? Meaning from your bank, to your expense ledger, straight up, right? Without having to come through, payment to vendors, right? And we'll look at, how we capture expenses, as we proceed. So, but those are just scenarios that you could, have relating to vendors when using QuickBooks Online and when using, a couple of other systems out there. Okay, so let's see if we have a couple of questions before I move to uh, a couple of other for the day. Okay, okay. So I think you have issues. So someone is raising that he has issues with taxes and mapping, you know, of income and income or revenue. I want to believe that should have been, at inventory items level, right? So I mentioned it yesterday actually. So if you make reference to yesterday's video, I mentioned it to us that when creating your revenue ledgers, right, make it the account detail on your chart of account. So you need to make it a product, sales of product. If I am not mistaken here, one moment. So that's the very first thing, right? When creating revenue ledgers, revenue ledger accounts that will be linked, right, to your item. So it needs to be sales of products. Yeah, needs to be sales of products. So as you can see, the detail type needs to be sales of product income, right? So when you do that, and you can always edit your ledger account to confirm, right? To confirm. So it needs to be sales of product income. So that way, the system would be able to would drop it for you. So that's the very first thing. Secondly, for your VAT, like I said, when you click on this VAT module, right? If you set it up first, then you won't have any issue. But if that has not been, set up, right? You click on that, you have a prompt that says, do you what frequency, right? What frequency? Uh, so just like this, as you can see, similarly here, so your start of tax period needs to be done already. You need to select, January. Filing frequency needs to be monthly, and reporting method needs to be accrual. So once you do that and you save normally, so your VAT should be okay and should be able to select, your VAT accordingly, right? So that's just what VAT entails. And the last question, which is saying, uh, like I told you, the system has, functionality to import. So it's something you can always look at from your chart of account screen. Click on the drop down, click on import, you know, and the system would give you a template that you can always populate. But these are stuff we look at in our advanced classes, right? In our advanced class, for QuickBooks Online. So, but the system has facilities for you to import, and the best I can give to you right about now is you click on this drop down here, then you click on import. So you are allowed to import one or two master files within your application, right? So that answers that. So let's now move quickly to customers related transactions, right, within QuickBooks Online. It starts in majorly from creation of customers, right? Customers must have been created within the system, right? And even if it's a new customer, right, you can always create them before you go ahead with a couple of transactions. And the very first thing, the very first uh, uh, customer related process that you have, with respect to how business environment works and how it will work using QuickBooks Online and a couple of other softwares out there, is that at first your customers might want to reach out to say, oh, they could make inquiries to say, okay, please, we want to buy this and this and this, or do you render this service, right? Can you give us what your estimate is like, right? What your estimate is. So they want to have that, right? So when you are being asked touch, in some cases you call it estimates, right? In some cases you call it quotes. It's like a quotation, that you want to give your customers, because at that point you guys have not agreed. But then what you've done is to make an inquiry, and you want to keep a couple of records using your system also, right? You want to come into the system and raise what we call quotation, right? And how do you go about that? You click on new here, right? And from here you see estimates. Estimates is just it's just like what you have on the purchase order end from the vendor. You can always raise estimates as much as you can within the application. It doesn't affect anything. you know it's just an advisory document, you know telling the customer that yes, we have this set of products, based on your inquiry, or this set of service, is what we render, and this is what we normally charge, for such. It's meant, it's now left for them whether they want to agree, right, or they want to further negotiate that estimate or that quotation you've sent to them, right? And to do an estimate within the application is very simple, right? The very first thing you need to do here is to select your customer. So let's now say that the customer, has not been created yet, right? Or the prospects in this case. You can always do, add new. We call it creation, creating on the fly, like you are creating it as you go. So you can always come here, do add new, and the system allows you to create a new customer, right? So it is that simple and it is that seamless, working with QuickBooks Online. So now, to make it much more interesting for us, let's go back and make reference, to our class exercise. And as you can see here, we have invoices and receipts that was being sent to customers, within the year in question, right? But before going ahead to raise invoices, we want to consider a scenario, that a sales actually started, right, from quotations that was being sent to customer. So we would use just one record here to raise an estimate, right, which in this case is a quotation, right, for our customer. Okay, so, and like I said, the quotation does not affect anything. It does not translate to your sales at that point. It doesn't affect the customer's account. You can raise as many quotation as you want. It doesn't have any financial, implication within your application, right? So as a business person, you want to send quotations to your customer. It's very, very simple, right? You can always do that using estimates. Okay. So now, yes, the very first thing is you select the customer here. So let's see, we have West Atlantic. Okay, so I'll select West Atlantic here. Yeah. So the estimate dates. So 3rd of January, so let's select 3rd of January, 2023. The system is equally asking expiry. There are some instances where when you send quotes, to your customers, it could be that, oh, the quote is only active maybe for a period of 1 week or for a period of 2 weeks. You know, there are instances where you send quotes to customers and you tell them, oh, this quote, you know, would only last for 7 days. If it exceeds 7 days, then there is need for us to send you a revised, quote. Probably there will be a change in price or what have you. So that is the purpose of expiration dates, and it is not compulsory actually, right? It is not compulsory. But if you want to tag, if you want to tie, an expiration date, to your estimate or your quotation, you can always specify it, within this. Okay. So location in question, yes. Class. So let's say this has to do with operations basically. Okay, so uh, product in question. So we have HP Light Book 5 units, 170,000. So HP Light Book. Okay, so the system is giving you a net swap of the quantity you have on hand actually. So I specify 5 at how much? 170,000. Okay, that being specified. And I specified tax as well, which is VAT. So I am assuming, in this instance, that this amount, this 170,000 that we've spelled out here, does not have VAT element in it already. Oh. So so the system would aggregate all of that amount, right, and do a VAT on it, right? Because I specify that the amount I intend specifying, is exclusive of VAT. There are instances where this 170,000, there might be element of VAT in it already. So if there's element of VAT in it already, at this upper part of my screen here, I need to include to say that I need to specify that, oh, this amount is inclusive of VAT. And when I do that, the system would, automatically subtract the element of VAT in it. Because that VAT in question, the VAT in question is not our revenue. The value added tax in question is not our revenue. So you need to be very careful as an accountant and as a business person. You need to ask yourself that question. This service that I'm rendering or this item I'm rendering, or I'm selling rather, is there element of VAT in this amount? Is the item vatable? Right? Because that VAT element, at the end of the day, or at the end of the certain month, right, would actually be remitted, to your tax regulatory agency, FIRS in Nigerian's context now, right? So that VAT, you don't own it. So you need to be very, very careful. You need to know the portion of your revenue, right, from a certain document you are raising as it affects your customers, right? And you need to know if that thing, has element of VAT in it or not, so that at the end of the day, you don't have issues, when it comes to VAT filing and all, right? So VAT is an interesting, case that you can always research on, right, much later. But in this case, I want to assume that this amount is exclusive, of VAT, so 170,000, and I want the system to calculate VAT on it, right? So is there any other line item here? So that's all. That's all. Okay. So this is an estimate, a quotation that we are raising, for West Atlantic, right? The dates very much important, right? Then product, the specific product that we are actually sending to them and in form of estimate has been identified. The quantity, the rates. Okay, that's all. This is what it will cost you, for 5 items. So I can save this, and if I want to save and send, to the customer or the prospect. I told us yesterday that provided an email is specified, for your customer or for your vendor, you can always send, documents to them directly, right? But we do not intend to send. And another thing you will notice for documents that we have been raising, if you want to, print them or preview how they look like, let's say you want to print them out or even see, you can always make use of this button that says print or preview just below the screen. Right. So when I come here and I do print or preview, right? So I can choose to uh okay, this is what it looks like. So I can choose to download this and have it opened, right? I can choose to download, as a PDF file, right? And I can choose to print and send to my printer. So that is how easy it is. So this is what the estimate looks like within QuickBooks Online, right? And this can always, you can always customize it, do one or two touches, to the estimate. Okay, so that is what estimate looks like, and we've mentioned, what estimate is, right? Actually, what estimate is. So it's equally called quotation in this instance. Okay. Now, the next set of things that could happen, two things could equally happen with that quotation we've raised. It's either, oh, the customer accepts the quotation. So if they accept the quotation and they are okay with it, right? Or let's say that they equally, reached out and then tried negotiating the price. And let's say we've agreed to give them discount or what have you, right? That has happened, like outside the application. That has happened in reality, right? So what they would now do, or what you need to request from them as a business person or as an accountant, right, is to do, okay, can you please send us, your PO, and this is in a corporate, environment context now. It wouldn't just work if it's an individual. You just want to once they say, okay, go ahead, I have these items supplied to us, you might not necessarily be dependent on getting a PO from an individual. But if it's a corporate organization, that you are working with, that is your customer now. So they can only send you a PO, a purchase order, their own purchase order. Do you understand? Because they are your customer and you happen to be their own vendor. So they will send you a purchase order, instructing you to deliver or to sell to them this set of items. You send them a quote, right? The quote you send to them, would bring about they sending you back, a purchase order saying, please deliver to us this item, this item, this item at this cost, right? So once you get that purchase order, then it simply means you can actually treat, you can actually make that delivery to them. You want to sell those items to them because you've gotten a confirmation, all right, for delivery or to sell to them. Right. So now the next phase is you now making that sale happen. So when a sales, has happened, right? You've delivered that item or you've sold that item to them. What do you want to do? You know, is either you convert if there's an estimate or if there's, a quotation already, that you've raised with respect to that transaction, you can actually convert that quotation to what we call customer invoice, right? But if there's no quotation, prior to that transaction, it's very easy. Just come into the system and just raise an invoice. An invoice could be independent, of an estimate or what you call quotation, right? So unlike the estimate, an invoice, is called a document of sale. When the sales has happened, right, you want to raise an invoice within the system, right? Because primarily, no invoice, no sales, right? The invoice actually translates to sales, whether the customer has paid or not. Invoice is not bothered about whether payment has occurred or not. Invoice, the customer could choose to pay next year, right? It doesn't matter. As long as that item has been sold, what you need to do is to raise an invoice. So the question is, how do you raise an invoice, or how do you convert an estimate to an invoice using QuickBooks Online, right? And which is what we are about doing now. Okay. So before I proceed, I want to be sure I am very much audible. Audible. Sorry. So I want to be sure I'm very much audible. Please confirm you can hear me and confirm if you can see my screen, accordingly. Okay. Okay. So we have a question currently. Yes. LBC just dropped a question, which has to do with the reference number that we have, on that payment screen, if I'm not mistaken. Yes, so you can actually alter that number. Yes, if you can actually alter that reference, basically, and specify the reference or the number of your supporting documents, right? You can always do that. Yes, let's say there's a checkbook or there's a bank reference or there's an internal voucher, you can actually use that number in that reference column. All right. Okay. So, okay. Thank you for that confirmation, Emmanuel. Okay. So I'm very much audible. So let's proceed. So now we want to raise, invoices, right? So we come here, we can come to new, right, to raise invoice, or we can go to our list of customers. You can go to your list of customers from there. You can even raise invoices from there, right? From the customers module, you go to sales, customers. From here, you can always, locate the customer. Can even type the name here. So once I type, West uh, Atlantic, and I click on, search here, the system would always give me, West Atlantic. And I can even come here to locate it. And you can see there are a couple of actions that I can actually carry out, right? I can come here to my action here, create estimates, right? And create, a couple of other, transactions. So what I want to do is to create, invoice. But let me be sure the customer in question, yes, West Atlantic. So I'll come here, create invoice. Okay. So now the customer is being selected. But you would realize one thing here. The system already suggested to me that, oh, this customer you've selected on this invoice screen, you have an estimate, which, in this case, a quotation, a pending quotation for this customer. This invoice you are raising, is it in relation, with these estimates? You need to ask yourself that question. If it's in relation to the estimate, it's pretty much easy, right? You can just select the estimate in question, right, and click on add. So when you click on add, automatically your invoice would inherit the properties on that quotation. The details you have, on that particular quotation you've raised earlier, the system inherits it. And when the system does that, all you need to do is to do a confirmation again. Yes, is this customer? Yes, at what date are you raising this invoice? The estimate date could be different. Let's say the estimate was raised last year. Sorry. Yes, it could be last year, it could be last month, right? It could even be yesterday. But if today is the actual date that that sale was being made, right? This is very, very important. When raising invoices, the date you specify will determine the date, your revenue or your sales will be reported for. Now, look at this little scenario, right? We sold an item, right? Today is let's say we sold an item yesterday, and probably because maybe because of one or two workloads and all, we did not raise that invoice yesterday. But then today, probably maybe I wasn't around yesterday. So now that I'm active, I want to raise the invoice. So the question is, what date would be applicable? right? So we find instances where users even make such mistakes. They would think, okay, they might think, oh, you should use the date you're actually raising that invoice within the system. No, the correct date that should be selected should be the date that that sale actually happened, right? The fact that I did not raise that invoice yesterday, right, does not mean, oh, because I'm raising it today, I should select today's date. No, I need to be specific. I need to I need to select the correct date, which is yesterday, right, as my invoice date. Because two things would happen, right? When you with reference to that date is actually the date the system will recognize the fact that, oh, items have been released from your warehouse or from your store. So the question is, with reference to that scenario, is it actually today? No, it was yesterday. So that is why, yesterday needs to be appropriately selected. One. Second is, when you are making or when you want to recognize or you want to report for your sales, yesterday's sales should count for yesterday, right? Accordingly. And that is the best way it should be, right? And even if your customer is yet to pay, that same invoice date would actually count as the date your receivable, you know, becomes your receivable is being recorded, for you to recognize customers that are owing. So invoice date or date naturally are very, very important. If you are not sure of the date when you are about raising the document, please confirm because it translates to your report. And you wouldn't want a scenario where your reports are giving you, wrong figures, right? Or wrong set of activities. So it is important. Dates are very much important when working on accounting softwares, right? So in this case, invoice date 3rd of January 2023. The due date, there are instances where, and this due date is based on these payment terms. There are some customers that are credit customers, right? Let's say normally any invoice we raise to them, we give to them, it's normally would be settled, or our agreement with that specific customer is that the invoice will be settled within 15 days or within 30 days, right? We can select. But if it's a cash customer, right? Cash and carry, as we fondly, say, in our part of the world here, you want to click due on receipt, due on receipt. So due on receipt, would actually be selected. So the same date, it simply means the moment you are raising that invoice, the invoice becomes due automatically, due for payment automatically, right? So that is very much important. That is what these payment terms does, and you can always create new payment terms. Let's say there are some set of invoices. If you do, let's say, 90 days payment uh, term, you can always add it. If you do 5 days, if you do 7 days, you can always add it, right? But due date is just telling you, when you raise this invoice, when do you want it, due. So I want to take it to be due on receipt. My invoice number, I can choose to go ahead with this numbering, and I can choose to, modify that if I have that, access. So I'll come here. Okay. So let's say finally this is for Lagos and operations department in Lagos. All right. So now remember, this is with respect to a quotation. And this on our quotation, we specify that, okay, we intend to sell 5 quantities to them at this amount. So when you are doing invoice, there is need for you to confirm, is it this same item that we are still selling? There are instances where they might tell you, oh, we don't want that Elite book, give us HP Pro book instead. you know so anything you teach that you've sold to them, you can actually, modify this to suit, that. The quantity, is it still 5 quantities that we are selling, or as at the time, we are actually invoicing them, you know are we selling 4, are we selling more than 5? You can always specify the exact quantity and the exact amount, right? And when you do confirm your subtotal and everything, do you want any additional, message or statement on your invoice, stuff like items received in good quantities will not be returned, refunds are not. And some of these things you can always, do them on message on invoice and, message on statements, as the case may be. And likewise, another good thing about QuickBooks Online is that when you are raising, invoices or you are raising anything related to such documents, you can always, attach couple of attachments. You can attach supporting documents. You can always scan, attach PDF, attach JPEGs and all for your own internal purposes. Maybe for another time you want to come back and re-download or make reference, to that particular source document, or attachment that you've attached. In this case, it could be a PO that was sent to you. You specify, you can always scan and upload, just so that it serves as a supporting document to that invoice for your own internal documentation, right? So you do that, and you can always, print or preview the invoice, you know, and you can always save. But let's say you are raising this document and you are not sure, or there are one or two things that you needed to, you can always cancel to go back or clear, right? So that is, the system allows you to do that. So on this note, I want to do, save and new, you know, but what invoice? That invoice we've done, you know, in fact, when invoices are being raised, for those of us that are accountants, when you raise invoices on accounting systems, right, or ERP systems, you know, a minimum of 4 ledgers or 5 ledgers will be affected primarily, because that invoice I've raised, right? So naturally, my customer's account, which is my receivable, will be debited, right? And my revenue would be credited. So if there is VAT on it, like we have there, my VAT will be credited because, if what I have done, let me go back one step, right? So I can, just show us briefly what. So if I come here, invoice, so the system would have debited my customer, you know, credited my revenue, credited my VAT account, my VAT account for the VAT element, the VAT portion, on that invoice. So additionally, if the invoice I've raised is a service invoice, that treatment would have just been fine, right? But if the invoice I've raised is in relation to, an item, right, a physical item, then two other ledgers will be affected. Because remember, inventory, right? Inventory items are involved. So, and on that note, right, the system would credit my inventory, right? And what would that translate to? The cost elements of those items that I sold, would be debited to my cost of sales ledger, right? So you can see, starting from my receivable being debited, right? My revenue being credited, my VAT account, if that transaction is vatable, you know, my VAT element would equally be credited in that particular, and we'll show you some of these things as it translates to reports, as we proceed. And likewise, inventory and cost of sales, right? So inventory and cost of sales, inventory will be credited, cost of sales will be debited. But with what? With the costs of that item, that we have sold. That is for some of us, that are accountants, in the session. For some of us, that are accounting students, right? And business management students. So you could be asked such questions. You could say, oh, you work with software. Okay, when I raise an invoice within the system, what will happen? So that is naturally what will happen, right? And remember, what we've just raised is just an invoice, not, payment. They are quite different. Invoices are always, totally separated from payments. They are different. Their treatment is different. When a customer is now paying, there's a different treatment, on that. You get to do that differently. So don't confuse or don't mistake invoices for where, oh, we've made this sale and the customer have made payment. No, the system is treating it as an accrual, method. So, and that is how it is in the business world as well. Invoices are always different from payments. So if you raise an invoice and the customer has made payment, let's say simultaneously at that point, you raise invoices and you raise payments. Customers will, and the receipt will then cancel out the invoice. But once you just raise an invoice, it stands, at just to say that your customers are owing you at that point in time, right? So I've seen instances where users, make some of these mistakes, So, and payment does not translate to sales also, So no invoice, no sales. That is, the primary thing that you need to note. So when you are doing customer receipt, it's totally different. Invoices are totally different. Invoices translate to your sales. And I hope we are very much together. If there's anything you are missing, you can always let me know, while I raise, other invoices, because of time, right? Okay, so if there are any questions, you can drop them. So let me go ahead and raise, other invoices here. Okay, so now on the 2nd of January, 2023, Diac Finance Limited actually, okay, sorry, that's for vendors. So now 4th of January 2023, in this instance, Progress Limited bought Seagate hard drive, and they bought 7 units, at 30,000 naira, per unit. Okay, so what we want to do, and you realize here that payments, equally surfaces, but let's take it one, before the other. Let's run the invoices through, then we'll come back to customers receipts, right? So let's see how invoices are being raised in this instance. Okay, so here I'm not starting from estimate any longer. I just want to go ahead, with the invoice. So the customer here is Progress Limited, right? Progress Limited is being selected. Okay. So what date is actually the invoice date? 4th of January. Very, very important. Like I said, very, very important. Okay. So because of our reporting, so let me take this to Lagos as well. So let's say this affects accounts. Okay. So they bought Seagate hard drive, 7 unit at 30,000. So I'll just come here, Seagate hard drive. Okay, so as we speak, we currently do not have, any quantity on hand, for Seagate hard drive, right? It simply means we are yet to buy, we are yet to purchase, Seagate hard drive, within the system. So we have two options. Is either we go ahead to purchase accordingly, or we can go ahead to do, say, item adjustments. We can raise this for our supervisor, and if management says that you can go ahead to adjust that item within the application, or whosoever that has that right can always come within the system to adjust accordingly, right? So just not to hinder what we are doing, so let's go ahead and raise, a couple of other invoices, right? But I cannot sell what I do not have, right? So that is how system works. Unless if some systems have been configured to allow negative stock, but in this instance, we do not have any quantity on hand. So if I impute any quantity here, the system would tell me accordingly that I cannot raise, I cannot proceed with it, with this invoice, simply because we do not have quantity on hand, right? So that needs to be noted. Okay, so let's raise the next invoice, which says James Ballory, right, actually bought uh uh so contacted us for laptop repairs, and he was being charged 80,000. Okay, so we can always come here. As you can see, we do not have James Ballory here, right? But what can we do? We can always create James Ballory as a new customer, right? Have it James Ballory. Okay, so email and a couple of other informations, we do not have it, right? So what do? We've entered the name, we click on save. So James Valory is there, fine. So what's the invoice date? 15th of January. 15th of January, right? So the due date is in relation to these payment terms that have been selected. Okay. So you would notice that I was selecting, locations and class, you know, uh, in my transactions. It is very simple, right? I mentioned yesterday that location and class, these are two, reporting, tool. Look at, okay, take for instance, for those of us that are accountants, your companies could say that, okay, we have cost centers or they have profit centers within the, organization. And they want to monitor, each activities based on each cost centers, right? Be it any inflows that are coming, any sales or any purchases or any expense, right? So which is what I have created location and class for. You can see I created location because I treated location as a cost center, right? So in this case, my location, you can say I was just toggling, Lagos, Abuja, Port Harcourt, so that you can understand how that works when we get to reporting, right? Class here, being selected, account, human resource, operations, and we can have class. In this case, I use department, as my cost center at that level. So we have location and we equally have department. Do you understand? So you could always make it dynamic in your own case, right? So I just had to add that by the side so that we know that QuickBooks Online equally gives room for, cost center level reporting and all. So, or division level or what have you, right? So that's for those of us that are accountants or even business owners. You could want to track your activities based on different segments within your company or your business. Okay, so class, let's say yes, this is still peculiar to accounts. Okay, so in this case, laptop repairs, because it's a service item. So at what? Okay, 80,000, 80,000, right? I'll do this, and what do? I click on save. So is there VAT on it? You specify. Yes, there is VAT, right? You can see that the VAT on this transaction is 6,000 naira, right? And total is 86, right? And I can as well, let me treat this as inclusive of VAT. Let's say this 80,000, right, has element of VAT in it already. So once I specify that, you see that uh, the system would automatically, deduct, VAT elements, right? So it simply means my gross total, right? My total before my VAT, is 80,000 less, this VAT amount, and everything that is due would then equal 80,000 naira, right? So I'll do that and I'll click on save. And with that, I've raised, my invoice. So let's see what the invoice looks like currently. Okay, so we can choose to say we intend to print. So this is what the invoice looks like. So you can see the amount rate itself. This is the amount. You can see the VAT and you can see the total, right? So if you look at the accounting entry I gave us the other time, right? So what the system would do is the system would debit, the vendor, the customer with this 80,000 naira, credit our revenue with 74,418.60 because that is our own money itself. Then this VAT, is to be remitted to, FIRS. So VAT will then be credited with this amount. And you will see that the total debit and the total credit would equal at that point. And this would only stop there because this is a service item. But if it's a stock, a physical stock item, right, then, the system would go further, debit your cost of sales and credit your inventory with the cost portion, of that item that is being sold, and that gives you a seamless, reporting, right? So that is how this is being done. That is how invoices are being raised. So we will move to the next phase. Let's see if we have any question for me before I proceed. Okay. Okay. Yeah. Okay. So we have a couple of questions here. So we have a question saying, okay, if the customer wants discount, okay, how do we review the journal for sales scenario? You just okay painted, that's fine. Then how do we raise an advance payment to the vendor, knowing fully well that PO is not recognized immediately until delivery is made? Yes. So I starting with the last one, I think I explained that much earlier. Payments can always be made in advance. You can always raise what we call check, right, within the system. You can always raise check actually within the system. So when you raise check, it sounds, it's more like an advance payment, to vendors, right? So that being said, then for discounts, if you want to, that means you have to enable discounts, from your accountant settings by default, so that you have to specify to the system that yes, you do discounts, so that on your estimates, right, the system now gives you room on that estimate screen or your invoice screen. You can now specify, discount percentages or discount amounts, right? So that is how discount works within QuickBooks Online. So if a customer wants discounts, you can always enhance the estimate. You can come back, enhance the estimate, you know, make provision for discount there, send it back to them, right? And if they are very much okay with that, they will send you their PO to say, okay, now go ahead. And if there's no PO, if there's any formal correspondence to say, oh yes, we intend to buy or supply us, then you can always go ahead and do your invoice. you know so, and yes, the other question, which is how you get to review some of these entries. Yes, you can always generate reports. There are reports within the system. We'll be looking at reports extensively, right? We'll be looking at reports extensively, but you can always generate reports on that. So when you come to your reports, you can always generate what we call account transactions reports, so that that will give you a much more seamless overview of what the journal in question looks like. Okay, so we'll be running us through that, as we proceed as well, right? So I want to move on to a couple of other customers related transaction, before we go for our break. Okay, so now let's proceed. So that is how customers invoices works, right? But then also for customers invoice, right, we equally have what we call sales receipts. Sales receipts. Sales receipts works like invoices too. But in this instance, like I mentioned, invoices are always independent, of payment. They're different, right? But you could have a retail organization, right? That you don't want to process, your customers are not necessarily, credit customers. You don't want to process invoices and go back to now start posting payment. So QuickBooks Online actually has a facility called sales receipt. So what sales receipt does is it's more like your invoice screen, but here you are able to treat your invoice and your payment on one screen, right? So look at this example of this transaction. This James Balori, that contacted us for laptop repairs and paid 80,000 instantly, right? You can always come here normally using sales receipt. Just select James Balori, specify the date in question, right? Then come here, uh, select what it is that is being sold to him, repairs. Okay, let's say this. Is there VAT on it? If there's VAT on it, fine, right? But here you see payment method. Did he pay with cash? Did he do a direct transfer, or did he pay via check? and we can always create different payment methods, right? The reference number for that payment, like all of this checkout, uh, tail and all. So deposit to, so which of these bank was the payment made into? Is it paid, cash on hand, right? If it's paid, say via POS, we could create a ledger, that is responsible to cater for POS related transactions, right? So we just select deposit to POS, because the system is expecting that this total amount is what, is being paid. You can see amount received. The total amount is what is being paid. So you can always use your sales receipt functionality. So it combines invoices, and payments. Sales receipt combines invoices and payments naturally, right? So it's like a faster way, of doing invoices. But if you have any invoice that payment has not yet been recognized or what have you, it is advisable, you go to your invoice screen, right? That I just said, let me point this out to us, right? Let me point this out to us. That is the functionality of sales receipt, right? Sales receipt is similar to invoice, but then it's a combination of invoices, and payment directly, right? It's a combination of invoices and payment directly. Okay. So now I want to move to the next line item, which is credit notes. Credit notes, just work, it works exactly like the way suppliers credit works. Just quickly, I won't be dwelling much on credit notes, customers' credit notes, right? But just quickly, let me just quickly summarize because of time to us. Credit notes, is also a document that is being raised, under two scenarios. The first scenario here, right, is when there is a return from customers. Let's say customers, some of those items we've sold, imagine some of those laptops we sold earlier, there are some returns, on them. We can always select, the customer in question that actually returned that item, right? And you see here, the system is saying there is an invoice, that was being raised in this customer's name. Do you want, is this credit note, is it in relation to that invoice? If it is in relation, you can always add it is best for you, right? And what do? You consider the date that that item is being returned. The date that that item is being returned. We could sell these items, say, first of this month, and it's being returned today, right? So today's date is actually the date that will be specified on your credit note, right? So then next you want to consider the exact quantity that is being returned. So yes, we sold 5 to them initially, but let's say they returned 2, right? We need to recognize that 2, as the quantity, and we finalize. That is a credit note being raised when there is a return, items returned from our customer. So the other scenario where you get to use credit notes is this. Let's say that the you raise an invoice, and this is how it works on any system too, right? You raise an invoice, and let's say you do not have that luxury to edit. Fine, QuickBooks Online allows you edit if you have the right as a user. You can edit the invoice, right? But let's say you do not, so you are being asked that, oh, how do you reverse invoices? On any application. It's very simple. You just raise customers credit notes. But the only thing here that you need to note when you raise an invoice now is, you select the customer, right? But the date, because if you are raising it as a reversal document, it simply means the date must be the same date, you have on that specific invoice. It needs to be the same date so that that credit note could be a reversal, accordingly with that date. So it has to be the same invoice date, right? And your item here, the line items you have on that invoice needs to be the same, exactly the same. The items, the quantity, the price, it needs to be the same thing. Exactly. It needs to be the same copy of what you have on that invoice. Everything, matching in and out. Right. And what you then do, is to save the transaction. in other words, to post the transaction. Always note that when invoices are being raised, and they need to be corrected, credit note is actually a reversal document to that effect, and vice versa. Do you understand? So let's even say that the credit note you intend to raise to correct an invoice, you even made a couple of errors. It simply means it's either you raise another invoice or another debit note, you understand, to reverse that credit note you raise in error. So credit note is a reversal document to invoices. The same way invoices can also be a reversal document to credit notes. So whichever scenario that you find yourself, right? So credit note is being raised in two scenarios, like I said. When there's a customer return of item, right? Or you understand. And secondly, when there is need to reverse an invoice. So those two instances would warrant you to raise, credit notes. But because of time, let's not waste much time on it. But it's just exactly the same way I've painted and highlighted to us, right? That is exactly what will happen, right? And it has financial implication, anyways. The same thing. If you are doing a reversal, the same legs that invoices have posted, the reversal of it. When you raise invoice, customers was being debited, revenue was credited, and the VAT. When you raise a credit note, the customer or the account receivable ledger would be credited, right? The revenue would now be debited, giving you a reversal of what had happened earlier using invoice, right? And that is how this works, basically. So that is how credit notes works, right? So if you have any question, you can always drop it. But for the purpose of we would move on to customers receipts. We'll move on to customers receipts. So if there are questions, please let me know. All right. But to raise customers receipts, right, very easy as well. Right. All we need to do is to, like we can always come here, click on new, right? Come here and click on receive payment. Receive payment. That is one way of going about it, right? And we can equally come to our customers module here, our customers module, and post, payments that is being made, by them. Can always come here, to receive payments as it affects or as it relates to that customer. So either of the two, the system allows us, do that. Okay. So now I would go ahead, I'll click on new, click on receive payment. So in that same note, I would make reference to my class exercise. Come to my class exercise here. Okay. So here on this very date, 3rd of January, right? So West Atlantic actually paid 170,000. No, okay, no. They paid 850,000. Yes, they paid 850,000 to our Zenith Bank account. Right. So this is the receipt payment screen. So the very first question you need to ask yourself is which of the customers made this payment. So West Atlantic. Select that. Okay. So here, what is the payment date? So the payment date here is 3rd of January. Like that here. Payment method. So let's say they paid with EFT, electronic fund transfer. I just want to specify that. What's the reference number? What's the reference number for that particular transaction? I can always, indicate where did they pay into Zenith Bank. Specify that. Amount. What was the amount that was being received? 850,000. 850,000. Okay. So that is being entered. We can choose to stop there, right? But then there's always what we call, you see, as an accountant basically, or as a business person, there's always need for you, to match when there's a payment. There's always need for you to match, that payment to the respective invoice that it belongs to. So that at the end of a certain period, you can always see invoices that are outstanding, right? Invoices that are yet to be settled by your customers, right? You can always see them, right? Accordingly in the system. So amount received 850,000. Now the system has done well to now give me the sort of invoices that are outstanding as it relates to this customer. To say that look at outstanding transactions. So this payment, was it on this invoice? If it was, I will just specify the portion of that money that is specific to this invoice 1001, right? So, and it is that easy. So let's say there are a couple of other invoices that are outstanding. The system would list them for me here, and I can apportion the money. So a customer could settle two or more invoices, at once. So it's just for you to apportion the amount he has paid, right? He or she has paid, uh, to the respective invoices. So it helps you do your matching accordingly, so that when you generate a report or when you see your list of invoices, you can see any set of invoices that are outstanding, any set of invoices that have been paid, right? You can always see them, right? So this 850,000 is specific to this invoice only, you know. So I want to do that, and I want to do, save, right? If I do save, that means I have posted the invoice. But I want to purposely do save and new. I want to purposely do save and new so that I can capture the next payment here. So let's capture this progress limited. Yes, we are here to capture the invoice, but then there was a payment that was made, to our Zenith Bank, 210,000, right? So I will come here, progress limited. So we can treat it as an advance, right? So progress limited does not have any open invoice, so no problem, right? So as at what date? This is 4th of January. Payment method, let's say they paid via, okay, let's say they paid with check. Let's just specify that. So our reference number could be, would be any supporting, document reference we tend to tie to it. So they paid into Zenith also 210,000. So how much? 210,000. Okay. So I'll do that, and I'll do save and close. Yes. So the system is seeing it, as an advance, as a customer advance, right? So which is fine, which is being done. So then lastly, we have here James Balori that paid 80,000, for laptop. Right. I can even come here, from the customer screen, click on receive payment, right? So payment method, they paid via with cash, deposit to, I think, cash on hand. Yes, 80,000 was the amount. Okay, I'm just specifying the reference there. Yes, on this invoice, 80,000. Okay, then what do? I just want to do save and close. Oh, did I consider the dates? Uh, let's see. Did I consider the dates? So let me click on this customer to see my set of activities with this customer. Okay, so transaction list. So this is the payment that was being made. Let's see. The correct date was not selected, so I want to edit this to make it 15th of January 2023. So that's fine. Then save and close. Yes, I want to modify. So I've modified that. So now you can always come, to even see, to do an overview, right, of the transactions that have been posted. So I can come here to say, okay, West Atlantic, let me even see what their statement is. Let's see what their transactions, the transactions, we've had, with them. Let's see what it looks like. So I can always come here, select the customer in question, West Atlantic, right? And I can always see, the document that is being raised. So there's an estimate that was raised on this date, which is a quote, right? So trying to okay. So there's an estimate being raised, as at a particular date, you know, then it was converted to an invoice. You can see the invoice is currently overdue, because so there's an outstanding amount of 63,000 750 on that particular invoice. So on this specific day too, they made a payment, right, of 850,000. And I can always drill down to even see the source document in question. So I can always drill down. If I click on this particular invoice, the system would open up the invoice screen for me, and I can choose to edit or to reprint, as the case, may be. Okay. So that being said, and if there's any need for me to do a new set of transaction, I can always raise that, from here. And I can always generate, customer statements. I can always generate customer statements, you know, for this specific customer. Okay. So that's being said. So let's now move, into the other agenda, as it relates to our training today. Okay, let's see. Do we have any question currently? Okay, so no question for now. I hope I hope I'm audible, and I hope you can still see my screen before I continue. So that is how you get to raise, payment within the system, right? That is how you get to raise payment within the system. And let's say there is a refund, you know, should you do customer refund, the system equally has, a screen called refund receipts, where you can always process refunds, to your respective customers, right? You can always process refunds to your respective customers. So you select the customer in question, right? So the date you are refunding the payment, the receipt, select that, right? And you specify, the amount that you are refunding. So you specify the amount you are refunding here. Just input, description whatsoever, the amount. So what the system would do is the system would credit, your bank that you selected here, right? The system will credit your bank and then debit, your customer's account, right? So that the payments can always, be acknowledged. Sorry, the refund can always be acknowledged into their ledger. So that is, those are just some of those scenarios that could always play out, right, as it affects your customers. Those are scenarios, and all of these things we've done, right, has actually translated to our reports. But we'll be moving into reports, in a later part, of the training. But the next thing, that normally occur, it normally happens in our business scenarios, right? How do we recognize expenses? Yes, I've sold. Yes, I've been able to buy from a vendor. I've paid my vendor, and in some cases where there are returns, I know how to treat them. Customers have raised invoices. Yes, I raised estimates, done invoices, treated, when payment is being made, looked at when refund is being made. Yes, those are what normally happens typically. But then there are also a couple of other activities that happens in a business, environment, which is expenses. You have, couple of organizational expenses, both the normal expenses that are of direct cost and those ones that are just your normal administrative expense, fueling, transportation, internet subscription, some of these things, right? Salaries and wages. The question is, how do we capture those, right? How do we capture those using QuickBooks Online, right? You want to ask yourself, how do we do journal entries? For those of us that are accountants in the house, right? So QuickBooks, Online equally facilitates such, right? How do we do journal entries, within, our QuickBooks, solutions, and the expense itself, takes us to how do we do bank related transactions? Yes, I'm receiving money, I'm paying money out, right, to my, as it affects, expenses, right? So this is what we'll be diving into, right, shortly, because we'll be going for our break, by 2 o'clock, be going for our 30 minutes break, right? So those are the next phase that we are diving into now, right? So we'll do all of these things, right? And we'll now go to our report. How do we interpret reports as an accountant? When we want to do audit, what form of reports are we, mandated to generate? When we say our income, how do we even generate analytical reports using QuickBooks Online, right? How do we see reports by these cost centers? Like I've mentioned initially, right? How do we even see some of these journal entries that had happened? This transaction that have been posted, what was debited, what was credited? How do we generate account related transactions? How do we do bank reconciliation? Right? These are what we'll be looking at, when we come back, right, from from our break. Okay. So if there are any questions, as we speak currently, you can always drop them for me. So let's attend to them before we go on a short break. Let's see. Okay. So please, I hope we all are together. I hope the training is making a whole lot of sense to us, right? And we are able to, we are picking up one or two things, right? That would always be useful, not just on QuickBooks Online, but particularly when you are working on, any accounting, software out there. Okay. So now let's just look at expense, before we go for that short bit, before it, so now how do we raise expenses? We can always raise expenses by clicking on of course, our plus, which is our action button here, saying, okay, what do we want to do? We want to capture expense, right? So I'll come here and I'll click on expense. So on that screen, I'm allowed to, to capture my expenses. So this is what my expense screen looks like, right? This is what my expense screen looks like. And my expense, would always be between, two set of, ledgers. Firstly, it is actually the bank, the cash or bank account that I'm funding that expense from, right? And secondly, the expense head. I need to specify, okay, this expense I'm incurring, is it transportation? Is it, what have you? I can always, so this is what I'm able to do on this screen. So within the next 3 minutes, let's just raise, an expense, right? So let's make reference to our class exercise. So you see here, we have other expenses made during the year, right? So on the 28th of January, 2023, salaries and wages, 90,000 was actually paid through JIT Bank. So we'll come here, right? 28th of January. So the very first thing is payee. So you can always tie, who is this payment, made to? If that payment is in relation to a vendor, but the vendor you are selecting there, the transaction would not affect that vendor. It's just for you to link. You just want to link, but it's not compulsory. The payee field is not a compulsory field, right? It's not a compulsory, it's just an additional field for you, right? Uh where you can always specify additionally, when sorry, I closed that screen mistakenly. So where you can always, there are some organizations that does that. It's an expense that is being made probably on behalf of a customer. You understand? So, but then you just want to acknowledge that, So, but that's what payee does. But primarily, what you need to note is the payment account. Which account is the payment being made from? And two things are at stake here, right? Note, right, that at times a payment could be an expense, could be a prepayment or what have you, right? It could be that okay, you are portioning some, uh, you have a prepayment and you want to, you can use journal to capture such prepayment actually, right? Maybe a payment, an expense that have been paid for, maybe earlier in the year, you've paid in advance, but then you don't want to apportion. Those are accountants would understand what I meant by that. But in this case, where we are paying from is okay. Quickly, we just have 1 minute left. Okay, where we are paying from is GT Bank. I want to select, GT Bank. My payment date, 28th of January. 28th of January. Have that selected. Payment method. Okay, let's say we paid using transfer. So a reference, just any reference, right? So the location, yes, this transaction is relation to Lagos, right? Is relation to Lagos. So the category is which expense, salaries and wages. Then I'll come here and I'll specify salaries. I can always type it out. Salaries and wages. Okay.
We have a wages account.
Yeah. Okay. So I can always specify my wage accounts. Then the description for that transaction. So I can always say payment for January 2023 salary. Just saying. Okay. So the amount in question is 90,000. Okay. These VAT you are seeing here. These VAT you are seeing here, right? For your normal admin organization expenses, even though you could be charged VAT, the provider for that service could charge you VAT, but that doesn't mean you will recognize that VAT as a VAT input. Do you understand? So your normal expenses, your normal administrative expense, the VAT element and the expense amount needs to be lumped up together, naturally as the amount. You are not, you won't necessarily, recognize VAT input, right? You won't necessarily recognize VAT, on on this expense, right? Because you need to ask yourself, this VAT in question, before I can recognize that, oh, this thing is VAT or is VATable, am I allowed to claim that VAT? You can always work with, say your accountants or uh, just to get much knowledge on that. As an accountant, you need to ask yourself, is this thing a vatable element to us? But look at wages expense. No, there's no VAT on it. There shouldn't be any VAT that needs to be recognized, right? So let's say this particular wage, affects account basically. I would select that, and if there's any form of expense that happen in GT Bank as at that specific date also. As at that specific date within GT Bank, I can always add as an additional line, right? So, but if there is none, let me see, 28, okay, there is no other activity for 28. All I want to do is to click on save. I can do save and new, right, in light of doing another one. So that is how you raise expense. That is how you raise an expense and tie the expense, to the cost centers if applicable, right? So that is how you do that. So on this note, we'll go on our short break. So we'll be resuming the session by 2:30. So if you have any questions in the meantime, please feel free to drop those questions. We'll address them once we come back in. So we'll start from here in the other once we come back rather. So thank you so much. So let's see us by 2:30, right? So it promises to be much more, interesting as we forge ahead. Thank you.
which has to do with bank reconciliation and reporting, or we call it a day. So for us to conclude on our expense, we need to go to the expense module. So these are various expenses that have been captured within the system. So we at this point we want to capture another expenses. So the system would always asks us for payee, and payee is just more like a reference. You just want to keep that record. Who did you pay to? So this is just more like just for the record purpose. You could even it could be that you actually gave money to your sorry, it could be that you give money to any of the colleagues within the organization to make purchase of maybe fuel or any of to settle any particular bill. So you might just want to recognize that person, or you say you paid to a particular customer or a supplier. But believe you me, the payee you are actually entering here, this will not affect the balance of such a payee. So it's just a payee just for that record to be able to be traceable to someone to say, oh, this is the person who will pay to. Doesn't mean that you are trying to accumulate balance, or you are making a supplier's payment or a customer refund. It is not something of such. So we want to select the account we are making payment from. So if we should follow our class exercise, it means I believe this first transaction has been captured, which is salary and wages 90,000. So it means the next transaction we want to capture is I think we are using 2023, so will be on the first of on the 22nd of January 2023, which has to be 40,000 that was paid electricity that was paid from cash. So we want to change this account to cash on hand. Then we want to change the date to the 22nd day of January. Payment method is still in cash. This is just the payment method is just a reference for you to be able to analyze. So you could create multiple payment methods just to say, oh, this is a bank transfer, this is a check, it's just a nomenclature to help you understand how those payments were made. Even if you make payment from your bank, it could be various methods. It could be a wire transfer, it could be a check, it could be a direct debit or something. So there are various ways through which payment could go from your bank, but it's not really affecting how payment are being posted to your bank. But it's just a category for you to be able to analyze or generate some reports in future. So the reference number here is the number on the deposit slip. If this were to be a bank transfer or something, the number on the maybe it could be the teller number or something, a reference number that you could want to always use to call up this particular transaction going forward. So in future, if you are looking for this transaction, you could always type in the reference number into the system, then attribute it to this transaction. So you could also pick the location for now and leave it in Lagos. Then the next thing is what are we actually making payments for? So from our class exercise here, we're actually making payments from electricity, so I want to search for my electricity. So I have my electricity expenses. All right, so the amount is, sorry, let me check my microphone.
Yes, it's very much better now. Very much
Oh,
better.
all right. Oh, sorry about that. I think I was using the wrong the wrong
No.
microphone then. So, all right. Just to continue, I actually want to type in the amount here, which is what we'll just do 40,000, and the class of this, this is just the category. I can say this is operations or accounts. In real life scenario, you would actually know the category in which a transaction belongs to. So here we just want to uh, uh, illustrate what is trying to, we were just trying to be practical here and trying to make what could happen in a real life scenario. So I'm actually making this payment from the bank. One of the uh, advantage of using QuickBooks Online is that from this screen only you could add multiple lines of transaction that has to do with the same bank and on the same day. So if, or let's say, there's possibility that you as maybe the admin officer, or you give like 100,000 naira to the admin officer to go and purchase a few things. So part of the purchase of those few things could be, oh, 40,000 naira was for electricity, 5,000 naira was for transportation, this was for security bill and all of that. It is just from one outflow from your bank. So it means that you gave from a particular bank 100,000 naira move out, and but this 100,000 naira was to provide for various expenses. So it means that those expenses must, have been incurred on different line item. So that is why we have multiple line item here. So if the total we give out is 40,000 and it's just for a single line, then it is good. We can proceed with this transaction, and we can go ahead with other transactions. So, but if this transaction is, let's say, I was trying to illustrate, it's like 100,000 and it is for multiple, then we can add all of those other lines here, then we proceed into that. So what I already took my time to do all of this so that we could really understand how and what is actually going on. So, but let me use the save and new button so that I could enter another transaction. All right. I saved and new. Okay. Okay. Mm, all right. Right. The next transaction we have here is generator maintenance for 20,000, and it is actually from our Sterling Bank. So we want to be able to select our Sterling Bank. And on which date is this? This is 22nd. It's still the same date, 22nd. Then it is, we can say check or bank transfer. Let's say we wrote a check and it's still in Lagos. Then this is for what? Generator maintenance. We have generator expenses, yes. The amount here is what? 3,000. All right. This was from cash. And the date was 18th. General repairs. So we have repair and maintenance. So 5,000 exempted. Yes. So then we save our new. The next one is 21st. This is GT Bank. Sorry. All right. So what did we pay? We actually did purchase of office table. So we have office expenses. So because the reason why I'm actually classifying this into the office expenses is because for some organization they have what we call capitalization threshold. So depending on the value of the assets you're about to purchase, some organization will feel like, oh, we purchase a laptop, or we purchase a phone, or we purchase a table. This should be expense of depending on the value, the number of life, the useful life, and all of those things. So even if the useful life might be 1 year, sometimes if the value is not material, organizations also choose to expense of such transactions. So in this case, we will be expensing this off rather than posting it to an asset account, where you could, where you could carry it and, do your general depreciation on assets. But in this case, we will just be expensing the purchase of table to office expenses. So we say so purchase of table, how much is 50,000, then exempted. Yes, then we save on you. Then the last on the list is electricity paid on the 22nd. From which bank? Zenith Bank. Electricity. Then it's 30,000 this time. And then this is exempted. Just like my colleague, explained why some of these, you know. So now, because this is the last expense here, I do not actually have any other expense to say. So that's why instead of me using, save and new, I can just use the button here that says save. So by the time I save, the system is going to post, this transaction, and it doesn't clear the screen for me. So because I have saved, I can close this screen so I can see all of the transactions that I have actually, post into the system. I could see the electricity expenses I just posted and so many other expenses that have been posted into the system. So yeah, this completes, our, sorry, excuse. Okay, so that completes our expenses capturing for the period. So the next thing we want to look at is we want to go to so many other key things that we need to do in the system, which has to do with what we refer to as bank reconciliation. Is a is actually a very brief exercise that would actually guide us through how we reconcile our bank, on a monthly basis. Because even if you post transaction, you need to be able to reconcile all of these bank, so that you would be sure that the balance you have in your bank is also the same as that of uh, your QuickBooks software. So, in such a way, for you to be sure that you have been reconciling and posting transactions to date, you need to be able to reconcile on a monthly basis. So, for you to do this, you need to go to transaction, then reconcile. So, if you say transaction reconcile, it means we are trying. What do we mean by reconcile here? Reconcile means that you want to be able to match those transactions, with your from your bank to your QuickBooks software. So it could be possible that by the time you receive you download your bank statement from your banking platform, there might be discrepancy between the balance you have in your bank and the balance you maintain on QuickBooks, and you won't be able to spot this difference if you do not actually reconcile. You understand? So if you reconcile, you'll be able to review those transactions one after the other and match them with what you have on your bank statement. So, as a matter of fact, once that is done, you would be able to, see those transactions that were maybe wrongly captured or omitted or captured maybe twice. So, the reconciliation window would allow you to select one bank at a time. So, meaning that you could decide to reconcile your GT Bank, your Sterling Bank, your Zenith Bank. You need to select a bank at a time. So you reconcile the bank and you select the period. So you can then move, from one month to the other, and also from one bank to the other. So we've started reconciliation on GT Bank. Let me resume reconciliation. All right. So I have reconciliation for this period. So if you need to do anything on this particular reconciliation screen now, you might need to say you want to edit info. Edit info here, this is where you type in the amount in your bank statement. So it means if you are reconciling, the system is going to ask you for most of you, because I have started this reconciliation window before. That is why I am coming here to edit window. But for you, immediately you come to transaction and you click on reconcile. Once you see start reconciliation, so immediately you click on start, as opposed to seeing resume reconciliation, you will see start reconciliation. So immediately you click on start reconciliation, then the next question will be what I am having here. The system will ask you to select your bank. So once you select GT Bank, it will ask you beginning balance, ending balance, ending balance rather. The system knows the beginning balance, then the date that you are referring to as the ending date. So what do I mean by ending date and what do I mean by ending balance? Ending date is the date you are reconciling up to. So take for instance, if you are reconciling maybe from inception till January, you understand? So according to this system that we've been using, the only transaction period we have is the month of January 2023. But say you've been using from last year, you've been using from 2-3 years back. So you need to be reconciling from all of those periods up to a certain period. So it means what I am saying here, if I have been using this bank from say 2021, then I am invariably telling the system that reconcile from that beginning, which is 2021, up to 31st of January 2023. But the fact that we've not been using this bank before now is still telling the same information to the system that reconcile from inception. Inception is still January. Reconcile from inception up to 31st of January 2023. And what this ending date implies to the system is that the system will overlook transactions beyond that date. So even if you have transactions for February, March, May, June, July till date in the system is not concerned about that for this reconciliation exercise. It's only allowing you focus on those transactions that you select, up to the date year. So all of the transaction from the last reconciliation up to this period is what the system is concerned about. So if you want the system to be concerned about up to February, you can change your date and say, okay, no, up to 28th of February. That is what I want you to be concerned about. But the most important thing you need to note here is that whichever date you are selecting, you need to provide the bank balance. That means the balance on your bank statement on that day. The balance on your bank statement on that day, because it will help you and the system to be able to match, to be able to tell you that, oh, on these dates, your balance and that of the system disagree up to this extent. So for us here, and the purpose of this, I think, let me check, do we have a balance statement and day balance? I think we need to check. Let's if I'm not mistaken, the balance we should have in our bank should be okay. Let me go and check that from the banking module, because I don't have those information here. Let's see the balance. In a real sense, we're supposed to actually check our bank statement. But let me see. Let me open another window here, which is the transaction. Okay, let me go to. I just want to quickly check the balance in this ledger. I want to guess this is the sum of all of these three. So, but are there all payments, no deposits? So it means we're having a negative balance in this ledger then. Yes. So payment of 200,000, payments of 50, and payments of 90. This 250, this 340 negative. So this should be the balance we are having here. So, but in real life, you should be able to have either so let me say 340. So, but please do not go with my approach of calculating end balance. You understand? End balance is always extracted from the bank statement. We don't have a bank statement here, so that is why I'm just trying to calculate my own ending balance. So let me save this. So then I want to select the transactions that are applicable. By the time you start, can you see now that before I start selecting, the system is seeing the difference between my balance end date, which is what I typed in, and the reconciled transaction as 340. So, but the moment I start selecting this transaction, this difference keeps reducing, because for each of these transactions that I'm selecting, I am telling the system that this transaction can be found in my bank statement. So I have the hard copy of my bank statement, or the soft copy, whichever the case, and I am checking each of these transactions with what is on the bank statement. Oh, do you have payment of 200,000 to this? Oh, yes, we have it. You check. Do you have office expenses 50,000? Yes, you check. Do you have wages and salary? You check. Anyone you cannot find on your bank statement that you notice on your bank statement. But for those ones you cannot find, you don't check them. So you leave it blank. You leave it unchecked, rather, I mean to say, you leave it unchecked so that those transactions will not be reconciled. Those ones that are reconciled means that you have confirmed that they are on your bank statement. So for those ones that you do not check, let's say if I cannot find this 50,000 on my bank statement, I don't check it. I do not check it. So then we need to investigate why did we capture a transaction of 50,000 and it didn't reflect in our bank statement. Oh, maybe the transaction failed, or maybe it could be failed. It could be just like we popularly say, maybe you actually gave a check to someone and the person did not go to the bank to cash the check. So it could be maybe on on a clear check, you understand, from the bank. So it could be any of those. It could be any of those things that could be that could be giving rise to those for you not identifying those transactions in your bank statement. But in this case, let's assume we can find it. So we've been able to check all of the transactions in our GT Bank, and most importantly, we see that the difference between what we have on QuickBooks that we have reconciled and what is in our bank statement balance that we wrote is fine. The difference is zero. It means it's good. Can you see? The system is even telling us that we are good to go because the difference is fine. So the next thing we want to do once the difference is fine is to say we want to what? We want to finish now. So can you see you reconcile this account up to that date that we've selected, which is 31st of January 2023. Yes. So the next thing you want to do is, if you have any other bank account that you want to reconcile, you can still select the bank account, Zenith Bank, and you put in the end balance and all of those things. Then you also reconcile, and that is how you continue to reconcile each of your bank, depending on how they have. So you continue to reconcile. So if I start reconciliation, what's the ending balance? I don't know for now, but we should check this from our bank statement. So, but I'm not going to reconcile this particular bank. I'm just showing you so we could see. So these are the transactions that we want to check for possible reconciliation. So these are the inflow and outflow. So if we have bank balance, we should be able to type our bank balance here and click on save. Then we start checking all of these transactions, for possible reconciliation. Yes, selector. So my negative 480, that is what we have. So, but I'm not reconciling this. So, is there any question on reconciliation? Let me check if there's any question on reconciliation before we, move forward. Okay. No question. Okay.
Yeah, there
So,
is none.
okay. All right. So, after we are done with, now that we are done with reconciliation, the next thing we want to take a look at is journal entry. We are just trying to look at some of the things that the accountant does, which is these are key activities for you as an accountant, which is your reconciliation, your journal entry, then your report. So the report is the last thing we'll be checking before we call the training, before we call it, a day on this training. So, but before we go to the report, let's take a look at journal entry. So we have journal entry. So journal entry. All right, fantastic. So before I go into practicalizing or explaining what a journal is and what can we use it for and how can it be used within the system. I want to believe some of us, not maybe not all, but most of us should, at least must have heard the word journal before. Journal is basically, the movement of transaction from one ledger account to another ledger account. Say, take for instance, all of the transactions we've been posting, from the beginning till date, they all have journal entry or journal implication. So meaning that, remember when my colleague was taking you maybe customer payment, take for instance, if you actually carry out a transaction called customer payment, it means the system, being an accounting system, is smart enough to understand that, for every time you actually make payment to your customer, I am meant to actually carry out some journal that would affect this transaction. So it means that for all of those transactions, we do not need to come and generate our own or manually capture the journal entry of those transactions, because the system is smart enough to capture those journal entries for us. So take for instance, if you make payments, if you receive payment from your customer, the system is going to, debit your bank and credit the customer, because the customer is owing you before. So the system is going to credit the customer and debit your bank. So your bank balance will increase, your customer balance, which is an asset, will also reduce. So similar thing for every other kind of transaction you've been posting. You make payments for expenses, the system will debit the expenses and credit your bank. All of those things are journal entry, but those are automated journal entries that comes with the system, based on those transactions. So we are not really to edit those transactions or edit or determine how those journals should be posted. The matter of fact is the system will automatically enter and post those journals based on those documents or module we are working on. But the journal entry we are dealing with specifically here are those other journal entries that we might need to capture, and maybe there is no a dedicated module for it within our accounting software or within or the kind of transaction is very complex. Take for instance, they might be, increase in some asset that you are holding. They might be even take for some accounting software that doesn't has the fixed asset module. You might actually want to, on a monthly basis, capture your depreciation. Since there is no dedicated module for capturing, depreciation or maintaining assets within the system, then you might want to use a journal. You understand? Although people say they use journal for correcting of errors, in accounting software, you hardly use journal for correcting of errors, except it is the errors that was also committed using a journal entry. Because the way the system is built is that if you made error from an automated uh, journal, there should be an automated journal that could correct that. What do I mean by that? If you make an invoice in error to a customer, there is a credit note that you should go and initiate to actually, correct that error. So if you receive money erroneously from your customer, there is a customer refund within the system that you should go and carry out within the system to correct that. Not that you receive money in error, you now come here to want to credit your receivable or debit your receivable and maybe credit bank or all of those things to correct those errors. No, these are specifically for complex transactions that are not covered, within your accounting software. Not just QuickBooks. It could be Sage. It could be any accounting or ERP system. So they have journal entry for posting transaction, and there are a couple of other things that you could do apart from depreciation. Say your monthly payroll. Take for instance, some systems have payroll integrated, and some systems you have to calculate your payroll outside of the system. But at the end of the day, you have a payroll journal where it's talking about the payroll expense, the payroll liability, the payee, the pension, the NHITF, the loan repayable if any of the employees repaying back loan. All of these, combination are in a payroll journal. So a payroll journal is commonly one of the things that organizations commonly use journal entry for on a monthly basis, alongside with depreciation of assets. So, but the use for journal entry in an organization is limitless. You can use it, continuously, provided the need is arise. Sometimes you are preparing your report, you actually want to reclassify some balances. You want to feel like, oh, now you have some balance in your non-current assets. You feel like, oh, this should now be a current asset. You understand? Or you have some non-current liability, on the annual basis, you want to take a percentage or a portion of those non-current liability to your current liability. So you do those things with your journal to move them around, to move around your schedules, your amortization schedule, your prepayment schedule, and all of those other things that you work around with. So I will not be illustrating with any specific example. I'm just trying to give us an holistic view of multiple things that a journal could do for you and your organization. So, but basically, the way journal should work is that the total of the debit and credit should be the same thing. The total of the debit and credit should be the same thing. And a journal entry, a transaction, it should have one date. So when is this transaction occurring? I could say, oh, this is 13th of January. Then what are the ledgers that are being affected? I can say, oh, let me look at one. Do we have depreciation? Okay, I think we have depreciation. Let me see, this accumulated. This accumulated depreciation. Okay, accumulated, no. Okay, so let me see salary. Let me just pick any accounts. Let's just say I'm moving from cost of sales.
Maybe a prepayment.
Okay, is
Be a
it payment
prepayment,
account?
maybe rent. Yeah.
All
Yes,
right.
prepaid expense.
Okay, all right. So we have a prepaid rent
Oh
account.
yeah.
So we have a prepaid rent account. We also have rent or lease expense. Okay, fantastic. So in this instance, let me assume you've actually, the way rent actually work is that maybe you pay, in this part of the world, we normally pay maybe at least a year. In some part of the world, you pay monthly. But here, maybe you pay a year, 2 or 3. So even if you've done that, the fact that you've paid maybe 3 years or 1 year rent doesn't mean that the entire 1 year rent should go into just 1 month of transaction or 1 day of transaction. No. So you could want to split them into the 12 months you have in that year. So let's say you paid 1.2 million as your rent. You could decide to say that 100,000 from should be attributable to each month, of the year. So meaning that every month in your income statement, you would always see 100,000 as your rent for the month, even though you paid 1.2 million naira at once. So at the point of you making 1.2 million naira, at the point of you paying 1.2 million naira, you must have gone to your bank, to post maybe a payment from your bank and select what we refer to as what the prepaid rent account. So at that point in time, what the system would do is to credit your bank and debit the prepaid rent account. So the system will have credit your bank because the 1.2 million is leaving your account at that point in time. So it's going to credit your bank account with 1.2 and debit the prepaid rent with 1.2 million. So it means on January, February, March, till the end of the year, we now need to come here to carry out a journal entry. You understand what I'm saying? To carry out a journal entry to say, okay, in January, what I need the system to do for me is to credit my prepaid rent with 100,000 and debit my lease and rent payments with 100,000. All right. So if I've done this, so it means every month I come here to do this. You understand? So the description will now be rent for the month. for the month. There is no tax. It's still exempt. So location here, let's still choose Lagos. So this is just an example of what we could do. I could decide to save this and leave it, come back in February to do this, come back in March to do this. But one of the beautiful feature of QuickBooks Online is what we refer to as recurring journal entry. So if you have recurring journal entry, the implication of this is that instead of me coming back every month to do this, because I know that this, okay, let me explain what we mean by recurring. Recurring is transactions that take place on specific interval. It is certain that this transaction will take place on specific interval. So, and one of the perfect example would be maybe your depreciation, your rent, like this. So I know that I'm sure as an accountant that we've paid 1.2 million, and this is January. I know that this will continue from January till December. It is certain. We've already paid. It's not like electricity that we say, oh, we are paying, electricity expenses might not, be certain because you don't even know what will be your electricity tariff at the end of the month. Even if you are using your prepaid, you might not necessarily have to recharge the same amount to your prepaid meter every month. But rent, you've already make payment. You now want to consume each of these particular payments every month. So like I was explaining earlier, that you could come back here every month to carry out the same transaction, but at the same time you could just make this transaction recurring. So by clicking on make recurring, so if you click on make recurring, the system is going to ask you what is the name of this. Like I said, this is just the recurring should not be for every journal entry. I'm only using this to make an example of a transaction that you want to carry out on a regular basis for specific number of time. It could be for the next 3 months, for the next 1 month, or for the next 2 weeks, depending. So this is recurring. So I could say monthly rent. This is the name of this recurring template. Then I could say this type, okay, not reminder, quickly and unscheduled. Sorry. Yes, scheduled, exactly. So create in advance how many days? Just create maybe 3 days in advance. Doesn't really matter. So the interval, this is what we are going to. Now be with me here. Interval means how frequent you want this transaction to occur. Listen to this particular key. So the interval is the frequency of occurrence of this journal. How often do you want the system to automatically create this journal entry for you? You understand? How often? Should you create it every day? Should you create it every week, every month, or every year? You understand? So how often do you want the system to create this transaction for you? So create this transaction every day, then it does it. Create it every week, then it does that. Create it every month. But because this is monthly transaction, we want to stay with the monthly interval. On which day of the month? On let's say, what day do we select here? Let's just say the last day of the month. The last day of the month of, so of every how many months? Can you see what the system is saying? Even though if the interval is monthly, we can say every 2 months. Can you see? The last day of every 2 months. So it means if the system creates in January, the system will not create for February. The system will create in March. It will not create for April. You understand? But here we want every 1 month. So if it is quarterly, we will just say maybe every 3 months. That would be a quarter. You understand? Then when should it start? It should start from which month? The month of January. When should it end? So it should end by December 31st. So once you've created from 1st of January to 31st of December, which is 1 year, then that is all. So depending on how you want it, if you just want it for the next 3 months, you could say, oh, start from January and stop in March. The system will understand that I will create every month, once every month for the next 3 months. But here I'm telling the system create every month for the next 1 year. So the system will understand, and I can just do what? Save this particular template now. Okay, you say the date. It was okay. Start date can be before today. Okay. All right, because we've gone past all of this period, we've done for January, we've done for March, and all of those things. That is why the system is not actually allowing me to create for those period, except I actually want to create for future period. Like, I want to start creating from today, which might be the month of September. You understand? So this might be useful for future because the system believes that you must have captured recurring transaction. So imagine I set recurring transaction, I said you start in January. So what do you expect the system to be looking at? So it means the system is already due for January, February, March, April, May, June, July, and it doesn't really make sense. So it should be from today. The system now understand that, oh, okay, I want to start creating, recurring journal for you. So basically, in a nutshell, that is journal entry. That is journal entry. Let me see if I can take questions before we go into reports, because we have a few minutes left. So do we have any questions? Anyone with question before?
Yeah, I think there are no questions currently.
All right, so let's dive into reports. We have like 20 minutes to look at our reports before we then have an holistic view of what has been done, a recap, and we also allow you to say 1 or 2 things if you have any comments or any questions, so we can do that, so that we can end the session by exactly 4 o'clock. So all right, so since we have no questions for now, then let's go into reporting. All right, so the system QuickBooks Online has so many reports. So many reports. One of the accounting software that I know dedicated their time and resources towards providing, with meaningful reports. So we have so many reports, and the system has been, they've been able to classify the report into various categories for us. And the very first report here we have, this very first category we have here is favorite. Favorite simply means that if you are on any report at all and you feel like, oh, maybe there's a particular report you love to always generate, it could be very far below or somewhere. Instead of you looking for those reports up and down, you can always ask any report to your favorite by just clicking on the star button. So if I see inventory valuation summary to my favorite, immediately I click on that star, I can go to the top and I would always find it there, inventory valuation summary. So that's how to add and remove reports from your favorite. You could also search for a report by coming here to type on any report, provided you know the name of the report, you can always come here to search for a particular report. So the next thing we want to do is to dive into some of these reports and give us an overview of some of what this report entails. So the first report we are looking at is the business overview, which has the bulk of the most report that we will be needing. Business overview. Business overview has to do with your income statement and your statement of financial positions report. So in the income statement, let's start by looking at the profit and loss account, which is the statement of financial performance or statement of comprehensive income. So whichever the case may be. So immediately I select the report, I need to explain certain things to you when it comes to report generation within the system. This key thing I'm trying to explain here is common and applicable to most of the reports you would be generating within the system, because once you understand you need to be able to speak. Now, what happened with reports is you need information from the system. You've been giving information to the system, when you were creating your master files, when you were creating the complaint company's settings, from the company setup, I mean to say, for master files where you are adding your customers, your inventory, and from your transaction, bulk of all of this from your transaction. So, but this is a time when you stop giving to the system and you want to take from the system. You want the system now to give you an idea of what is happening in your organization, an idea of what is happening on your reporting. So, and for you to be able to, for the system to give you this information accurately, you need to be able to explain to the system specifically what you need, specifically what you want. You understand? You need to be able to explain to the system those data. You need to be able to, I'm looking for the right word here. You need to be able to give the right information to the system so that the system will not give you ambiguous reports. You understand? So you don't just go and download anything and say, oh, I downloaded my income statement. So you need to know specifically what you are actually downloading and what you are actually, viewing as a report. Because once you understand the report parameter, then most of every other thing in the report are easy for you to just store with. So one of the common thing mostly on the report parameter is always found at the top of the report. You can see the report itself is below. This is profit and loss, which is statements of comprehensive income. Most of the first thing is always report period. Report period has to do with the range of data you are telling the system to export for you. So, okay, you are telling the system, now go into your database, go and give me a report from first day of the month to 15th day of the month. The system won't give you a report for the 16th day. It will definitely be just from 1st to 15th. So you need to be able to tell the system from which day to which day. When? Specifically, the system is precisely, it's not just give me income statement. No. From which range? Where should I be pulling this data from? Let my report be factual, not ambiguous. Are you saying I should give you a report for this month, or for last month, or for last 3 months, or for last 1 year, or for last 12 months, which is the same thing as last 1 year? So you can always type in the date range of your report from and to, or you use this wonderful feature here that they've been able to create some of these things, in a way that could easily make sense. Instead of you, selecting the date range one after the other, you could just say, oh, generate for last week. The system understand what last week means. You understand today's date. You understand last week's date. So by so doing, the system is able to give you last week's date. You understand? So generate not just for last week, generate for let me say, so I said last week to date, and okay, let me say this quarter. Can we see from this period to this period? This quarter is 3 months, so we can say this year. this year to date, from the beginning of this year to date. So from 1st of January to today's date, oh, I can say, no, I need a report for last month. From 1st of August to 31st of August. You can tell the system since 60 days ago. This is report for since 60 days ago. You understand what I'm saying? So next 4 months, next 4 weeks, these are all of the different reports that you have. You know, these are just custom dates that you have within the system, but you can always choose custom so that you can select your own date range as you so desire. So, but for the purpose, I can do this. Let me do this here. Let me do this here so that the system can show us everything we have in 2023. So this year, I believe the only data that will be shown will be, or I can specifically go to I say custom month from beginning of January to 31st of January. I can do that as well. If January is the only period we post to, then this will be the only period that will be out. So then the system is also asking me display. Another thing we need to know is display columns. Although this will not be in all reports, but this is just telling us that should I just give you the total, or I should split the total by weeks, by days. You would get to see this in action and understand it better soon. So active column, do you want all active columns, or the system should be able to show all or only non-zero? So it means if we say all, it means there are some ledgers on your account that has 0 transaction. It means you still want the system to show them. So is there any ledger like that? Okay, we say active. So if I say all and I view, all will show me all transactions that has 0 once I click on run report. But I only want to see active, and also compare period. Compare period. Anytime you see the word compare within the system, compare has to do with you generating reports side by side. So if I'm generating for January, like I've selected here, do I want to compare with when? So compare with this data. Oh, generate for previous year, this same month, the previous year, or this same, comparison. Or you want to compare with any of these other information. You want to compare with previous months, previous year, and all of that. So it means there are some reports we would also be generating in future that has to do with maybe generating actual and comparing with budget, if you have budgets in the system and all of that. But based on the parameter that I've selected here, for the system to now take effect, based on the changes I've been making, I need to click on what? Run report. So immediately I click on run report, the system will update. Can you see January 2023? You can decide to say, oh, I want to change my reporting name. I want to call it this income statement for, the way you want to show, the way you want to display it. You can always edit the name of your report. And you can see that this is the report the system is already showing for me. So with this total only, we have so many things that we could easily change this entire report by just saying that this total should be broken down. Should it give me the total only, or break it down into let me say locations? If I have locations here, I can say give me this by location, and then I say run report. Can you see it's now showing me my report income statement by location, because we have location that is Lagos, we have location that is Port Harcourt within the system. So the system is now breaking down my revenue, and from here I can see that, oh, in Lagos you've been doing what? Repair of laptop, and in Port Harcourt they've been posting to revenue repairs, but here revenue laptops. So it means they sold laptops in Lagos, but they were repairing maybe laptop or something else in Port Harcourt. So I could easily see from even the nature of the revenue how those revenue have been flowing into. I could see the cost of sales. I could see that for sales in Lagos they had the cost. So we purchased for 550. we sold for 850. We're able to make 300. But since repair is a service, there's no cost attributed to it. We're able to make this. However, they have some other expenses that they actually incurred. So I could see the breakdown by location. I can see how each location is faring. And I could say, no, let me see class. Let me even see the department. Is it those accounting department that is spending our organization money? Or is it which department? I can say, okay, account. Oh, account is, they are spending money, but there are some department that would not really specify. These are also some monies that has been spent. So we could see we could see per customer, per product and service, and the likes. So, but these are various ways the system can generate our income statement for us, and they would be meaningful. So some of these income statements that I've actually generated, they are also created as a custom report for us. So if I go to the business overview here, I could see profit or loss comparison. Can you see when I was talking about comparison, profit or loss details, profit or loss, by class. This is just the last report I generated, which has to do with the different class, which is the account department and every other department that we do have. By customer, by location, all of these reports, they are already been predefined for us, and we can always move around them at any point in time. We also have cash flow statement of changes in equity. We also have the balance sheet, which is the statement of financial position. We could see all our assets and liability. We could see the total of payables that we have, and every other liabilities that we have. So don't forget, whenever you run report, don't be too hasty to start extracting your report or start making use of it. Try to verify, excuse me, try to verify what is this report data. This report data is as important as the report itself, because if you are exporting the wrong report data, then you might be exporting the wrong information. So let's see what I have here is, I say this week. Look at, or I say this month. Because this month, we've not actually posted to report. Okay, this is statement of financial position. So I'm saying that this month, as of today, what are the changes that we have? But if we had been generating like profit or loss, and I said this month, so let's see, can we see for the month of September we have nothing, because nothing has been posted. So someone will now be saying, oh, what's happening now? Why am I not having report? No, you've not posted transactions for the month of September. You've only posted for what? January. So instead of you generating this month, you could go specifically to January, or you could go and pick any period that has January in it, which is this year. Definitely, month of January will be included. So you can see we still have the same report, just like the last one we did, generate. So some other kind of report that we do have, apart from business insight, is insight into some activities. Look at the nomenclature that was used here. Who owes you? So who are those people that are owing you? So you have customer reports. You can see account receivable age summary. So account receivable, anything aging in the system has to do with the number of days the report has actually been outstanding in terms of receivable and other reports. So we have payable aging also, but specifically now we are looking at the receivable aging. So receivable aging has to do with, when has this money been outstanding? So I could see that, we have all of our money from West Atlantic and Progress Limited outstanding for 91 days and over. So it means based on our current date, which is 10th of September, they have been owing us money from over 1 day. So it means invoice that has been created since January. You understand? So definitely it is over 80 days. But if I want this report to have actually been maybe as at the end of January, then definitely it should still be in the current period. So now let me run it. Can you see? We now have all of the transactions in the current, because it's between 1 to 30 days. So it's still in the current, it's still within 1 to 30 days. Current period are for reports to show under current, it means that that report is not that receivable is not yet due for payment. I don't know if you get what I'm saying. Let me explain that again, and please listen. For a particular receivable to be in a current period, it means that that receivable is not yet due for payment. So why would a receivable not be due for payment? A receivable will not be due for payment in a situation where you have a payment term with that particular customer. So say you have 30 days payment term, and that 30 days payment term, you remember when my colleagues was taking you on invoice, there is a portion on the invoice. Let me quickly show us if I can quickly do that for some of us I might have forgotten. Let me go to invoice. Okay. Terms. Can we see? Terms, 30 days. So if we have 30 days, it means the invoice date is 13th, but it is due on February. So because it's 30 days, it's due. So if you generate a report before and you select that the aging, the date of that age analysis is before this date, that particular invoice will be showing as current because it's still not matured for payment. So when you are giving an invoice as at today or on this particular 13th day of January, and you say you are giving 30 days term, it means you are not expecting payment until this date. You are not this person is not owing you. You shouldn't be sending reminder to this person because you've given them 30 days to pay. It doesn't mean that they cannot pay within those 30 days, but your organization is still fine. Like, absolutely, you don't, it is normal for them to owe you between this period. So, but if 30 days is not the policy, of your organization, or it's not the term agreed on that particular, it could be 15 days, or it could be, pay cash and carry, just like you finally said earlier. So it could be due on receipt. It means if it is due on receipt, it is instantly. So you buy it today, it is due today. So automatically, this particular invoice, when posted, would not be under current. It will be due instantaneously. Immediately you create it, it is due for payment. So you should allocate payment to it immediately. So that is basically one of the things that actually, so because this report is looking at the invoice date and based on those particular invoice. So all right, so the next report we want to quickly look at will now be soon be rounding off. So we look at who hiring you. We look at this open invoices statement. This could be statement you want to send statement to all of your extra statements for all of your customers. You can easily use that. And sales and customers. These are various reports that you can try to generate and see. Can you see? So this is customer contact list. These are customer contact list. So sorry. Who you owe. These are your payables. So the same way we have customer aging, we also have payable aging detailed, payable aging summary. So the difference between the detailed and the summary is that the detailed will spell out individual invoices, while the summary will just mop up all of the invoices under a particular vendor. So you can generate reports for your expenses and your tax liability reports, employee and accountant report. These are various wonderful. So, but before we go, before we round up on reports, let me show us one of the wonderful. You can also customize report and save those customization. So, but one of the reports that also makes sense is the management reports. These management reports can, the way we customize, and you can actually create management reports to actually include packs of reports in your management account. So packs of reports in your management account means that the way we do present report to management in a way that this report we would have so many documents, the details, the notes to the account, the organization logo, and all of that. Let me just review one. Let's say for this year, company's overview. Can we see what the company is doing for us? Management report actually for the period. It has created a PDF document prepared on 10th of, you see, for management use. So this is the table of content. Then this is one of the reports, profit or loss. Then it's also generating a balance sheet for us, and all of this on a management report. So you could actually export this as PDF and print it out, and you could actually create a management report. You could actually create these reports, and you could edit. You could add more reports to it. You could say you want to add new reports. So we have profit and loss and balance sheet. You could add new reports to it. Select the report you want to add to this management report, depending on the kind of report you submit to your management, or you submit agent report, add it to it, and you have 3 reports. You can save and close. So if you had, so you can add a lot of reports to your management. The one that you do submit. Yeah, I think company overview. Yes.
Yeah, just to modify the name.
Okay. All right. So you could actually add a couple of other reports to this particular report, just for, these are not just any report. These are reports the management are interested in. You understand? Maybe on a monthly basis, on a weekly basis. You just add them, add so many explanation, add notes, and the system would automatically generate and export all of these reports to PDF for you the way you do. Depending on what your management are interested in. Just go there and say, okay, you know what, give me this, give me that. And before you know it, invoice list. If you want this, you save and close. So if I come here, I could always want to preview for this month, or for this, or for yesterday, or something this year. When I preview this report, it's going to export all of those information for me. Can you see now that it has added aging analysis to my table of content and invoice list? So I have a session for this, another for this. This is age analysis, can you see? And invoice list. So these are my outstanding invoice. So this is how you present report to management. So management understand and see all of these reports, and you can add notes, add tabs to all of these reports, and they actually makes very life easy for accountants when preparing reports or submitting report to management. So by my time now is 10 minutes to 4 o'clock. So let me take question before I go. Let me, please, if there's any question, you can okay. I think there's someone drop question. Okay, I had the network challenge when you reviewed the bank reconciliation. Please, can you take me a walkthrough again? Okay. How do we treat the bank interest, like charges? I mean, okay. All right. Okay, let me quickly give you a brief run through of the reconciliation. So I said for us to reconcile, we need to be able to go to our transaction and go to reconcile. Then at every point you want to reconcile, you need to be able to select the bank you want to reconcile. Then you can always start or resume reconciliation depending on where you are working from. So for it, -480. So let me edit and assume a bank balance. So I also said for you to reconcile, two critical information is actually needed. You understand? So two information is actually needed, which is the ending balance 480. So this is the balance on your bank statement at a particular date. Or before I even come to this balance, let me talk about this date briefly, very, very fast because of our time. So you need to be able to pick a period for each of the bank you are reconciling. So if you are reconciling for Zenith Bank or for GT Bank, when are you reconciling up to? From the inception of the bank or from the last reconciliation date to this particular ending date you are picking here. So the system would be able to reconcile, add this balance to this balance and, check all of those things for you. So what date are you reconciling? So if you've been reconciling from 2020, 2021, and the only thing you have is January 2023, then it's still fine. The system will reconcile only January 2023 for you. But let's say you've not reconciled the entire 2022 and you did this, the system is going to reconcile from the last time you reconcile, maybe it's 2021 or from the inception, up to this date that you've selected here. The system would include in the reconciliation exercise. So meaning that transactions after this date would not be included for this reconciliation. So if you want to include it, you might need to change the date to maybe February or March or whichever period you want to include. So whichever date you do select, you should input the balance in your bank statement on this particular balance, ending balance. You understand? So you should put the balance. So you check your bank statement and you input the balance into this particular section of the screen. So the balance on this date and on this date and so on this date I input the bank statement balance here. So if you have this is service charge and interest earned, just like you are asking for. So if there's any interest charge that you have not captured before, but you notice on this particular bank statement of yours, then you can actually put them here to say, oh, on the 16th of, we are reconciling for January. So on the 18th of January, there is a service charge of 5,000 naira or 500 naira, and there is a bank charges. Or it's just, you understand, a way of you capturing any of this. But we are not doing this for now. But should in case this avenue is just for information that are in your bank statement that are not captured on your QuickBooks transactions before now. You understand? So just like you were asking in the chat session. But the most important thing, the most important situation is you doing your date and the balance as at that day. So once you click on save, then you go back here and the system look at transactions within the system. Then you start selecting all of the transactions. Then you start reviewing one after the other. The first transaction, this transaction that didn't display here are based on the dates you have selected there and transactions that are not yet reconciled. So even if you have transactions is 2020, once you've reconciled up to a certain period, all of those transactions will not be displayed yet. Only the transactions that have not been reconciled and up to the date you've selected. So even if you have transaction for February, because you selected 31st of January, you will not be seeing transaction for February. So I want to say that, 850 West Atlantic was a deposit from West Atlantic. Is it on my bank statement? I said yes. Okay, another payment. Can you see now? Immediately I had 850. the system did what? The system add this amount, added this amount to my bank. So this is an outflow. The system is also deducting this. Also, another one is in my bank statement. Did I receive this? Yes. Did I receive this? Yeah. Did I receive this? So the difference between what I have here is actually negative. So it means I think what I entered there was actually not correct. This should have been just 480. Sorry. So immediately I was selecting all of this, the system is actually bringing it close to what I want. And at the end of it all, I can see that the difference is 0. So at some point in time, if there's anything different, the system is telling you that no, it is always good when you'll be able to reconcile for this period if your difference is what? If your difference is 0. You understand? So but now that I did this, it's now fine for me to be able to reconcile now that the difference is 0. So but like I said, the balance we are inputting here should be what we have in our bank statement. You understand? So now we've been able to compare that balance and the transaction. So if we still have this not reconciled, then it means after checking, there must have been some transactions that we've not yet captured, or transactions that we need to omit because we do not need to reconcile them. So then the next thing we need to do is to click on finish now, so that the system can say you have reconciled this account and it is, reconciled. So any other question, please? So Adebisi Omotayo, I think I've been able to answer your question.
Yeah. So before we call it a day, there was a question initially, which I promised that I would show the participant how to go about that. So okay, one moment. So I think I can just show them in 1 minute. I think it was being asked by DBC. Yeah. So let me just take this few minutes to just show her through. So she asked, when I was explaining,
Sorry,
yeah, okay, let me share my
sorry,
screen.
yeah. Sorry, please, if you if you like to speak or you have to just briefly before we go, if you have you want to use the microphone, please, you can just raise your hand so we can quickly, give you the microphone so that you speak, just for we to, get to hear from you audibly. If you want to say anything or you have any questions that you want to ask, generally it could not even be question about the trading. It could just be question about the firm or anything you just want to say, contributions or anything. Since we are towards the end of the training, once it's done, you can raise your hand now so that we can hand you over the microphone once it's done, explaining what needs to be done. So you can just use the raise hand feature behind. You would see that on your bar, so you can see. So let me reduce hand of fame so we could see fresh hand. Okay, Aziz, you can.
Yeah. So basically, when a transaction is being posted, right? So a question was asked as, but how can you see the journal entries, uh, that ensue right from posting that transaction? And I mentioned, the ledgers that are being, debited and credited when invoices are being raised. So let me just show you an example of one. So I just remembered now before we. So I'm now back at my customers list. So let's say West Atlantic. Having to click that, right? West Atlantic. Let's see the set of activities that had happened. Okay, for West Atlantic, okay, there was an invoice. So let me, you know, uh, click on this invoice. Let me edit this invoice. So on that posting screen, on the source document screen, once you've posted, right, you can always come to more. then click on transaction journal. So you come to more and click on transaction journal. So both on expense, on any transaction screen at all. Once the transaction have been saved, right, can always click on more and see the transaction journal. So this is the transaction journal for that invoice, I just opened up now. And you can see these are the ledger entries. When I was explaining, revenue, account receivable, inventory, cost of sales, then VAT. So this is a typical example of ledgers that are being debited and credited when invoices are being reached, right? So when you do a when you do a credit note rather, like I said, it's a total, reversal of these ledgers. So should you want to see the postings, right, that arise from a particular transaction that is being posted, just go to that document, to the source document itself, right? Then you click on more and you click on transaction journal. So it takes you to the screen directly. So same thing goes for suppliers related transactions. And that is how easy it is, within QuickBooks Online accounting software. So yeah, so that's just it from my end. So I just said let me chip that in. So let's see if we have a couple of hands up so that we
Yeah, yeah.
can.
Femi's hand is up already. I think Femi is raising his hand. So I'll give him the microphone.
Okay, so let me stop sharing screen then. So
So I think Aziz, please you would show us
right.
the complaint overview once you're about to round up. So well, I think Femi is about to talk now.
Okay.
Hello Femi, you have the microphone now. You can unmute your microphone. So
Can
and
you
if
hear
there's
me?
anybody, yes, if there's anyone who also want to speak or ask question, you can please raise your hand and we'll give you the microphone. All right, Femi, we can hear you.
Because I really appreciate this course. This is my first accounting course I have ever done in my life. Though I studied accounting in school back then, 2015, but I have not done anything accounting before. I've been working and not in the accounting department. So I really love it. It's just that I saw most of the things are really strange to me. Really strange to me. Really, I have not heard them before, but I'm just trying to use what I have seen before for me to come in. But I want to ask a question now, and this is my question. My question now is that number one, now I am not working as an accountant now. That is number one. Number two, now how can I put this in practice? How can I put this in practice? That is my question. How can I put this in practice? Hello?
Okay.
Hello?
Yeah. Thank you, Femi. Yeah. Well, the beautiful thing about learning accounting software is that it's not just limited to you practicing as an accountant. It's also applicable to you in every other areas within your organization. So take for instance, if you are maybe a sales manager or you are human resource or all of these things, you would need knowledge of accounting software, and also some ERP solutions. Although we have some other software that are dedicated for maybe activities like HR or things like that. So, but the knowledge of accounting software and ERP would actually be useful in uh, most of the administrative, aspects of one's business. Even that is even as an employee. So, but talking as a business owner, if you have your own business, then this will also be very useful for you as well, because the thing here is that you will be able to uh, understand what is happening in your business better. You'll be able to understand how to interpret, your financial information better than before, compared to what you are being given by just your accountant. You understand what I'm saying? So this is will be useful for you definitely in practice.
Okay, no problem. I understand.
All right. Thank you. Thank you so much. Really appreciate your time. All right. Please, who else we have any question? And I think I saw Victoria or someone the other time trying to. I think I saw Victoria. She's still there. Victoria, are you still there? Please raise your hand again. I think you mistakenly removed that. Right. If we don't have anyone else who wants to ask question, then we can we say thank you. I think Aziz has some final words for us. If you still want to, please, you can still raise your hand before call it.
Yeah. Okay. So thank you so much, everyone. So it's indeed an amazing time with us, right? And we are very much confident that when you go back in your own personal space, when you reflect on this video again, watch them, practice. Don't let it stop here, and that is the major thing. And for some of us that are not currently working as accountants, right? So some of these things are just things that happen day to day, right? They happen day to day. They happen around us, business case scenarios, and you can see we've painted them in this light as well. So when you hear stuff like purchase order, when you hear customers' invoices, you should be able to say one or two things. And it could equally prepare you for the next big job, actually, right? So you can always reflect on some of these things, digest them, understand them. And we are always working with you as well, right? So please feel free when you have any challenge in practicing on your own, or you come across a couple of stuffs that you needed clarity on, you can always reach out to us via the group chat. You can write to us, send us email, and we'll be there to respond to you. So please practice some of these things, reflect on it, take your time, rewatch the videos. When you have challenges, please let us know. Please let us know, because when you don't practice these things, you can easily forget some of them. But the good thing is the video is always there for you. The manuals are equally shared with you, right? The class exercises are there for us to work with and practice. And yes, and also don't be limited to what we've done in the training, right? So if there's anything you feel like, does this software has the capacity for this, feel free. And let's say you are currently using a software in your company and you're having one or two challenges with them, please feel free to reach out to us. We'll be willing to help you, to assist you, right, on them. And let's say your company as well runs, a manual accounting kind of thing. Maybe you keep your records on Excel, right? It's actually not good enough, right, in today's world. There are applications that are cost friendly that you can always use, even cloud systems that are cost friendly that we can always configure for you, and turn you on, and your work is as good as easy as a business owner, and equally as an accountant, whichever case it is. So thank you so much. My name is Aziz Adomi once again, with my colleague Olabi Oshiade. On behalf of the entire team of Droidedge Consulting, we say a very big thank you, and we are sure you wouldn't hesitate to recommend us, when it comes to, software configurations for any company or anyone. And we look forward to seeing you in our subsequent trainings. We do a couple of other trainings as well, right? We do trainings on other application, and be rest assured we'll be sharing with you some freebies, right? Some tips across several softwares. So it's been a wonderful time. And please, we look forward to your review, right? Your review in all of our platforms. So we'll be sharing some review links with you, right? So please, we'll be looking forward to your review. These are some of these things that encourages us and keep us going, right? So thank you so much once again, and I hope
Yeah.
you have a wonderful rest of the day.
Okay. So Victoria is around now. Please, you can unmute your microphone so you could talk. Victoria, you have the microphone now.
All right. Good afternoon. Please, can you hear me?
Yes, you are audible now. Good afternoon.
All right. Thank you. First of all, I want to appreciate this company for the privilege to learn one or two things from you. It's an honor and a great privilege. All right. My question now is I want to ask if we can actually recreate another company account and also, play around the software. Like, okay, if I want to work around trading company, a consultant company, I don't know if you get what I'm trying to say. So if we can actually, create a company account over and over again.
Yes.
Okay.
So you
Okay.
can. Okay. Olabi, do
Go
you want
ahead.
to say anything?
Yeah, no, go ahead, Aziz, please.
Yeah, so the simple answer to that is okay. Firstly, thank you so much for the compliment. We really appreciate it. So the simple answer to your question is yes. So it's very much possible. So you can always make use of the sign up button, right? All you need to do is just to specify, a new email address, right? So it's just another email address will be needed for you to create another company, right? To be able to walk around. So that is all it takes, right, for you. So you can always create new companies should you deem fit.
All right. Thank you very much.
Thank you so much, Victoria.
Thank you.
All right. So I think that should be all. We would always, continue the conversations, right? Via the group
The
chat,
chat.
and yeah. So thank you so much, everyone. Please endeavor to watch the video. Take your time, watch them. Some things become much more clearer when you watch. So thank you. Yeah. Bye.
Yeah, thank you all.